Good evening all, and welcome to the day 2 session of the virtual refresher course on bank branch audit program of 2 days. Now I would request our chairman K. Jalapati to give a welcome address. Sir, chairman, sir.
Very respected senior council member and part chairman of SCRC, CA Joman K. George, secretary of SCRC, CA Panaraj, resource persons of this evening, CA Kuntal Shah and CA Mony from Calicut, senior members and friends. A very good evening to all of you. On behalf of SCRC of ICI, I welcome CA Joman K. George to this bank audit program. For the second consecutive day to interact with the members is a great delight for me to welcome our renowned resource persons, CA Kuntal Shah and CA Mony to this program. My appreciation to each one of the participants for our continuous support and encouragement to SCRC. On behalf of SCRC, I welcome you all for this second day program on bank audit refresher course. Yesterday we had impressive sessions on bank audit planning and documentation and hierarchy norms and audit of advances by our eminent speakers. Going by the feedback I received from the members, I am extremely happy that yesterday deliberations opened up new vista to the overall aspects of the respective subjects. With the gracious presence of our today's speakers, CA Kuntal Shah from Ahmedabad and CA Mony from Kozhikode, the participants will have yet another lively evening session and a feast of knowledge on the subject of technology as an audit tool in bank audit and a new LFAR and other certificates. Their in-depth knowledge and their analytical approach on bank audit, which they would be sharing amongst us, will take us to newer insights on the subject of discussion today. On behalf of SCRC, I express our sincere thanks and gratitude to both the resource persons for sparing their valuable time to be here and upgrade our outlook on the subjects. I would like to share my thoughts on the expectation of SCRC from our members and look forward to their support and contribution to make SCRC a flourishing year in activities. SCRC derives strength from all its 61,000 members, and in my first communication to the members, I had solicited your views and suggestions for the betterment of SCRC. Though I have received reactions and response from some members, still we expect the cross sections of the members in practice and in industry to come forward with greater participation and exchange of thoughts. Your suggestions would act as a catalyst to motivate us to plan programs of your expectations. The extensive interaction between SCRC and its members would bring out closer coordination and open up newer avenues of professional activity. Please stay in constant touch with the SCRC in its pursuit to provide the best you want. Dear members, let us once again showcase our prowess with our timely and efficient completion of bank audit. Yes, we are always known to the regulators and the public at large. Before going to the technical session, I request CA Joman K. George to share his thoughts with the viewers. Thank you.
Thank you very much, Chairman. Good afternoon to all of you. Very, very dynamic, young, very active chairman of SCRC. My very dear friend, not just a friend, for me, is a younger brother, K. Jalapati from Coimbatore, who has started out very well this year at SCRC. Still, we are having issues, difficulties posed by COVID, but he is relentlessly taking all the efforts to engage the members and also conducting the classes all through using the best possibilities of technology. My compliments to you, Jalapati. Keep going. Real good show. Two of the very learned speakers this evening, CA Kuntal Pradip Shah from Ahmedabad, who is so much connected and so much affectionate to the whole of South. We talk about one nation, but when it comes to bank audit, I think he's spending more time in the South. I remember his support during my chairmanship as well. In Kerala, many of the branches he has come, and before the members logged in, we were just discussing, and he's so keen to come down physically, not very happy being addressing members in South virtually from Ahmedabad at the earliest possible time. Probably, hopefully, we'll COVID will fade out and we'll be able to have you. to have your valuable knowledge shared with the members. Speaker of LFAR, another very dear friend. I cannot call him a friend, a very senior colleague. Kerala, we call him Manisami with respect fondly. And he is all in one and a partner of Shankaran Murthy, a firm which has got rich experience. It's in varied experience in central statutory audit of many of the leading nationalized banks and many of the scheduled banks as well. So a reservoir of knowledge when it comes to, and today he's there to enlighten us on the new things in the LFAR, which are quite demanding. As the presentation unfolds, we will get to know. The secretary of SIRC, another senior colleague, and the senior most in our team, S. Panaraj from Bellary. We call him Bellary Raja, and all of the coordinating exceptionally well. Other regional council members, central council members, if they are online. Most importantly, my dear colleagues, respected senior members, past MF, SIRC, and colleagues. We are 1,358 as of now. Others are logging in, numbers still ticking. Great show again. Once again, my compliments to SIRC Jalapati, and of course the technical team, Shalva and his team, who's giving very effective support. We are able to communicate as if we are sitting together. During my time, we had the physical meeting in Taj Coromandel, where the attendance was hardly 600. Today it is 5, almost last, I think yesterday, registration is 3,001, and of that we probably have 2,800 of them logging. Wonderful show, no way to great show. Once again, my sincere compliments. Now about the topic of bank audit. Yes, bank audit seminars in the month of March become an annual, I would say, ritual, not without reason, because in the last many years we were seeing a lot of changes. The environment is very dynamic. You know, we always used to talk about the master circular of RBI, which would tell us what are the thrust areas every year. And since 92, so for young members, it may be a shock. From 92, we have the new IRAC norms, which was discussed threadbare yesterday. Income recognition, asset classification, it's not just IRAC, plus based on the classification, standard, substandard, loss, doubtful and loss assets, provisioning also has to be made on that basis. Even on standard assets, as a measure of immense caution, as a measure of prudence, we make a provision, or even on standard assets where no adverse features persisting. So bank audit is a completely different, I would say, a ball game, if I may use a layman's term. One, because there are very, very specific reporting requirements, apart from a normal statutory audit. There is a strong and effective system of internal control. You have the internal audit, you have the concurrent audit, you have the RBI inspection. About all that, the central statutory audit has to comment upon. That's a very good thing. And with that, those controls, there is a counter check from the customers also. If there is a wrong transaction, the counterpart would naturally report. Some people say, if it's a debit, I would surely go to the bank. If it's a credit, I would wait and see whether it is mine or not, or let it be there, that kind of. But then that counterpart check is very much there. Another feature, which I have a slight different view on, that is the time frame within which this has to be done. It's a bank audits, there is a time frame. Yes, we cannot delay it. So normally that time frame has to be respected. But I think we should take the required time to the basic verifications. If there are a lot of bad loans in the system today, our economy is stressed because officially 14 lakh crores are the officially reported NPS in the Indian banking system. With the COVID problems, it is going to be substantially more. And this year we have to be in 21 March audit. We have to be doubting Thomas. That's a term which we use to saying that approach with substantially more of fractional skepticism. The explanations that the management gives, the branch gives, or probably the regional manager will call you, the solid manager will call you, they cannot be taken for granted. All those explanations, I would say this time around, has to be taken with a pinch of salt. And if need be, salt, pinch of pepper as well. What, Mony sir, you agree? We have a lot of pepper in Kerala. So, you know, being a little more skeptical, doubtful about the explanations that give. I'm sure most of you would have, we have had a lot of sessions in the region everywhere across on the COVID publications or COVID pronouncements of the institute. If you say that the crux, the spirit of that is that all these publications, 6 of them, which came out in a short span of time, March to May, by the Accounting Standards Board and the Auditing Standards Board, a joint advisory came. All that the spirit of that is that the concept of professional skepticism shall stand amplified. Globally, it is expected that by 22 March, the freshly generated bad loans in the global banking system would be 2.8 trillion US dollars. 2.8 trillion US dollars. This is expectation. India will surely have a share of that. Therefore, we have to be extremely careful. That's a point I thought I'd start with. And then about the timelines, and we have had many experience where as a branch auditor, when you step in, the manager would ask this question even before saying good morning. Yes, you've come for the audit. When will you complete? He doesn't say good morning. He'll say, please start. He say, when will you complete? And he would also probably say that, so last year it was a good firm of accountants. They did it in 3 days. Meaning that if you do it in 2 days, you are even better for. Hope I'm able to drive home the point. These kind of undue timelines are not binding on us. We respect time. We may have to work a little overtime, though personally I'm against working late into the nights. And as a saying goes, burning the midnight oil is not required. But if you're an outstation audit with a team of people, yes, we have to respect that. But don't hurry in, because we should not take it as a shield also. We did not get the required time, therefore we did not do it properly. Another thing is, like SIRC is doing, all the branches in SIRC and also SICASA, this time we will be doing programs for the students. All said and done, we need a, I would say, if not an army, we need a good number of students to execute this. So they're training on, maybe first year students, we may have mix of this. I think 2 things we have to do very importantly. One is the in-house training, which every one of us can do it in our own way. In fact, we all do that when the bank audit, of course, in the years we have bank audit, except when we have a break, we do that and say that the students, the team is empowered, and that's a continuous learning process. There is no dearth of information, guidance. The institute's guidance note, of course, is there, and today online so much of information. Click of a button, we can download. In fact, there's a plethora of information on bank audits. I remember 2005-6, I was on the Auditing and Assurance Standard Board, the policy making app. So after the new board constituted in February, the major assignment the board does is on formulating or rather finalizing the guidance note on bank audit, which used to be this thick. Now, for last year, we didn't bring out a hard copy. The soft copy available. It's beautiful reference, very useful reference. And I know the kind of work which is going into the preparation of that. I had to stay 2 days extra to be supporting the efforts. That time it was chaired by Honorable Amarjit Chopra sir, who later became president of our institute and today is acting as a mouthpiece of the institute. Therefore, that's very important. And the point here is to say that, okay, we cannot be part of the constructive interpretation which the banks do. Constructive interpretation is fine if there is, with all the adverse features, if there is subsequent behavior of the account by 10th of April, by the time we complete, if it has been substantial repayment has come or reschedulement has come, then a reclassification is possible. This time there will be additional thrust on, painting a picture which is rosier than what the actuals will be. So that is where we have to be careful. I'm sure that 2 of the speakers will take us through the nitty-gritties of one, again, technology. Technology, I did miss out initially. The topic is technology as a tool. Technology, we know that COVID has taught us. And today, if all of us could sit together like this on one screen, one from Bellary, one from Coimbatore, Ahmedabad, Calicut, and 2 from Kerala. So Kerala is a majority today. Okay, fine. Yeah. And Manisar has become a very sought after resource person. So I'm happy to see, I think tomorrow day after he's going to Ahmedabad. So Kuntal Shah would have, invited him. Sir, so that let that process kind of that happen. So technology, we learned that COVID has taught us that technology is not an enabler. Technology is a driver, without which we cannot reach anywhere. In doing the audit today, belatedly we realized, and most of us today have a remote access. Sitting in my residence where I'm sitting now, I can have real-time access to the server, which is required. So that there are technologies which are very, very high. Technologies become cheap now. I mean, less expensive now. It is affordable. Therefore, we should leverage substantially on this. So we'll hear from Kuntal Shahji on the details on how that's applied in Bangalore. Before I conclude, I'll just share with you it was a year back, I could interact with Mr. Sanjeev Mehta, who is the MD of Hindustan Leaf. I'm part of Kerala Management Association, where I'm serving as secretary. We had gone to the IMA National Conference, All India Management Conference, where he was, that year he was the president. I think it was the year before last. And we had a very close interaction with him. One thing which he said was very striking. Listen, I'm not doing many of the things I've been doing 5 years back. But invariably, I make it a point. Invariably, I make it a point to spend at least 10 to 12 hours every week with my digital counselor. The term uses digital counsel. We have heard about legal counsel, medical counsel. Now that I was hearing that term for the first time. It could be a set of youngsters, not in a very formal attire and all that. Those are the people who tell us how technology has to be used. They are the people who created Amazon. They are the people who created all these technologies. Now, one of the Kerala companies, a startup, I'm not becoming region specific. Kerala company is Mr. Joy Sebastian. His, platform, that is the meeting platform, is getting in the final stage of approval of the union government. Probably all of the country would officially make that platform as this thing. So technology is taking us places. So, and today, without that, we cannot. So that kind of a training has to happen in-house. Plus, please send the students for the SICASA programs. With that, the team would be totally empowered. So with that, those introductory remarks, let me conclude. Thanking the chairman for the wonderful opportunity for interacting with so many members, and it's still ticking. Nice that we have two of these very, very experienced, seasoned stalwarts enlighten on the very, very important topic, which is the topic of the season. And this audit season would start with the bank audit. Moving forward, again, there are a lot of issues today. If you interact with senior council members, there's a newfound trust, precisely why Institute has made standards on auditing a mandated topic for CP. They have given instructions to the region SIRC, to all the branches, saying that, hey, look here, the compliance level of members, particularly in smaller towns with standards on auditing, are not sufficient. We need to gear them up on that. The other one is the code of ethics, which is equally important. Probably a lot of cross references in the code of ethics on many of the standards on auditing, and this way vis-a-vis as well. So I mean the other way around also. So therefore, those are things which we should keep in mind. Documentation, which I'm sure that yesterday would have been enlightened. Audit documentation is huge importance. I will conclude with one more instance, which recently a member from a very small town in Kerala called me, that there is an inquiry about a group. There was a huge fraud in one major group. And he had 4 years back done the audit to one of the group companies, which was a typical small private limited company. We have that 5 lakhs capital, accumulated loss 4,90,000, 10,000 rupees cash balance, and audit fee payable 3 years. This kind of a balance sheet. He had signed that, and SFI has written a letter. And the first point is, please provide all the evidence that the audit, you had done the audit in total compliance. I repeat, total compliance with auditing standards issued by the Institute of Chartered Accountants of India. This is the first question SFI has asked. I hope all of you know, Serious Frauds Investigation Office, SFI, which is under the MCA. So that is the importance of documentation. So let us do focused work. And again, in the sphere of, there are fears that bank audit is slowly fading out. Maybe smaller firms will have a challenge, but I'm given to understand by experts. Manisar, I think, would agree in saying that the effort is happening at the large nationalized banks is to replace quantity with quality. Sorry, you will not get 5-6 branch audits because you are a 20-year-old firm, 30-year-old firm. You may get one branch which will give you a very decent fees, but which you cannot complete in 2-3 days. You have to do it like a proper corporate audit, do all the planning, do all the documentation, collect all the relevant evidence, discuss with the management. LFAR, we know LFAR again. Manisar would tell us that LFAR is not just a questionnaire. Yes, no, not applicable. That's not enough. Comes to verification of advance, a whole lot of information has to be given. This time around, there are a lot of new things. I'm sure that this session, both the expert speakers will throw light on all those areas and empower us to do the audit in this season. So wish you all the very best. And thank you, Chairman, once again for the opportunity. Before I conclude, let me say that COVID is not gone. In Kerala, we have a lot of issues. Maharashtra, yesterday we had the highest count ever in the country. So COVID is not gone. Let us stay safe, stay focused, but at the same time, stay focused and determined. That's very important. All the best to all of you. Jai ICA, Jai Hind. Back to you, Secretary Pandey. Thank you so much.
Thank you. Thank you very much for your opening remarks and also setting the tone for the day's deliberations. And with your rich experience and your coverage of the topics and the precautions that are to be taken, definitely it will be very useful to all the members who are here. Thank you again, Javan sir. Now I take the privilege of introducing the first speaker for the day, CA Kuntal Shah ji, who is speaking on technology as an audit tool in bank audit. He is a fellow member of the Institute of Chartered Accountants of India, practicing as a partner in Pradip or Shah, and he practicing the field of audit, income tax, GST, FEMA, and company law. He has a diploma in computer program, a secured A+ grade in diploma computer program of CDAC. He was part of the panel of auditors on the guidance note and audit of banks for 4 or 5 years of the ICI. Was co-author of the manual on concurrent audit of banks published by International Standards Code of ICI, and co-author of early warning signals of fraud through credit weaknesses published by ICI again. Author of note on a review of demonetization activity by chartered accountants in banks by ICI. Article on audit of foreign exchange transactions in statutory banks, bank branch audit published by EIRC, and an article on audit of foreign exchange transactions in statutory branch bank audit published by WIRC. And his presentations at various organizations by ICI and other professional bodies also. He has also deliberated on varied topics like role of concurrent audit, auditor post demonetization, CFS, that is Consolidated Financial Statement Preparation and Presentation of the Companies Act, and the nitty-gritty of the depreciation provisions of the Companies Act, a bit about bitcoins. Like that, he has presented on various other topics, including, very importantly, opportunities for chartered accountants in ERP and also the Excel as an audit tool. So he is one of the most sought after speakers. And sir, for your information, I have received inquiries from at least 8 branches to get you physically to come and present the papers. And I told them it is impossible at this time. So that shows your popularity and your commitment towards the profession and your presentation. So floor is yours, sir. Thank you for accepting our invitation. Sir, you are muted, sir. Please unmute.
Thanks a lot, Panarajji. Thanks a lot, Jalpati sir, Joman, and Mony sir. It is always a pleasure to be speaking at SIRC branches or SIRC per se. As rightly said, yes, a lot of branches have said we want you to be physically present at branches, but because of COVID, I am restricting my travel. Though I traveled for Trichy, Madurai recently, but still restricting a lot because I don't want to be exposed because of this common travel plans and everything. But since we have a technology, almost all the days up to 31st of March is all packed with all seminars twice a day or even thrice a day as well. So it's always there is a pitfall as well with this, that everyone says that, sir, you are at home only or you are at your office only, you can take our section as well, right? And it becomes very difficult to say no at that point of time as well. And again, it's all what I really like to have. So I accept all this request wherever possible. Without wasting much of the time, I'll start with the presentation. I'll just open yeah. Is it visible, sir?
So you can make it full screen. Is it full screen or? Yeah, I think it's full screen now. Yes.
Yeah, it's full screen, right?
Yeah.
Yes, sir. Yes, sir. Continuous.
You can proceed, sir.
Yeah. So today we'll be discussing on technology as an audit tool. It's always a difficult task to have, Reason being, you have multiple set of softwares, multiple set of technologies within the bank. With this Nirav Modi case, it has also become very difficult to audit under such an environment. Reason being, and you can see the flavor of that fraud into this current year LFAR as well. Whether all the softwares that the banks are using are already integrated, or how is the integration process. So a lot of things have happened this time. It's going to be a very difficult task this year. Mony sir will explain in detail regarding the changes in LFAR. I don't want to barge into his domain. I did some part of that into Madurai seminar, but I don't want to do that way. But what I have done this time is I have created an exhaustive presentation. Though I'm not going to take this entire presentation, it is about 100 slides, and I cannot finish it off within 1 hour or this time. It generally takes 6 to 7 hours. But what we'll do is, since I have done this similar seminar a year before as well, when there was COVID immediate restrictions were there. At that point of time, I did cover a major portion of that. So what I'll do is I'll cover this time the newer portion, or the ones which I had not covered at that point of time, and that presentation is already there onto YouTube. So we can have benefit of both. So entire presentation will get covered with 1 year prior information as well as this one. Though there is not a major change into the CBS side onto that aspect. But there are few important changes this time which we should be all aware of, and we should be cautious about as well before signing. Let me first start with disclaimers. These are my personal views and need not to be considered to be the views of ICI branch councils or of my firm. It should not be considered as a professional advice, and emojis, screenshot, menu codes, etc. are the property of respective software development trademark owner, and this presentation is for guidance purpose only and not for commercial purpose. So challenges, let's first discuss the CBS. We'll discuss challenges and how to come out of it, or are there any alternatives available within which or not. First, the list of or the CBS used in India, predominantly we'll find 3 softwares: Finacle, FlexCube, and TCS banks. Finacle is currently having 2 active versions, Finacle 7 and Finacle 10. Most of the banks are now migrating to Finacle 10. That's the newer version, which has various capabilities with the new technologies. The rest 2 are Alnova Financial Solutions and SAP Banking Services, not used in India but other parts of the world. Even Finacle is also used in various parts of the world. So what we'll be focusing more on to, we'll be focusing on the CBS. Not only that, we'll be also discussing our various tools available either through a third party softwares or a third party websites or some other sources. We'll discuss that part as well, and I'll give you some guidance on to how to you can say that, and certain set of reports which you should be using it along with Excel. I'll not be in a position to share how to do it in Excel because of the paucity of time, but some other day we may have that part as well. So starting with this, there is an important update that we should all be aware of. That is guidelines on automation of income recognition and asset classification in banks, issued by RBI on September 14. It talks about various aspects. The important ones are automation of NP identification, income recognition, provisioning, and generation of returns. It has to be automated. That is what the basis of it. You cannot have a manual intervention into it. Right. The moment you have a manual intervention, you will have a problem. Now you can see the flavor of this particular into LFAR as well. So LFAR was, I think, amended in September 5. That is about that is the 9 days before this circular. Activity to be carried out on daily basis. Now that is very important for us. Under IRAC guideline, it says that the account should be classified as NP on timely basis. And now it categorically spells out that it has to be as a day-end process. See, this automation part should be part of day-end process, meaning thereby you need to have now the identification and classification on daily basis. Downgrading and upgrading through STP, that is also a very important one, because many of the times we have seen that, and most particularly the 31st of March, the branch officials or the bankers would say that, sir, this recovery has happened, or sir, he's making payment, see, here is a check, or here is a DD, sir, please do this, you can ignore that, or you can upgrade that, right? But that kind of things are not going to happen now, because it has to be through STP. Now STP talks about which are the events under which you can have an upgradation of an account, or which are the events when the downgradation can happen, right? So gone are the days when you can have even the post balance sheet recovery to be considered for this, because system won't be recognizing it, system will be recognizing up to 31st of March. So I find that this particular circular has clarified so many things, and where we were having problems in earlier years, and because of certain set of pressures, and we could not even resist onto certain kind of this issues. Then comes very specific item, manual intervention in this entire process in only exceptional circumstances, right? And that too, you need to have a defined process when you can have a manual intervention in this particular NP identification or income recognition, this processes. Now you cannot expect now that the banks would be doing it in a normal routine manner. Only hitch into this 31st of March financials would be that this has a deadline to be complied with by 30th of June 2021. A lot of banks have started working on it. A lot of banks have already gone with this one, right? So probably 21-22 audit would be very smooth one with this. The problem is how the software is configured. Otherwise this guideline was there years before as well in different form, but banks could not follow it, or probably there were certain issues with that. We will not be entering into that domain, but this part is very important. But along with this, we have challenge this time is on LFAR. LFAR this time has a major change onto two aspects. One is the review of advances, second on the systems. Now the system part is very important into this, reason being it asks for certain things which we till now were not reviewing, or reviewing but we were not reporting it. The important part is on whether the master data is properly updated or not, whether interest rate is properly updated. Yep. Any issue?
Nothing, sir. Nothing, sir. Please continue.
Okay. Right. So that is where it is very important for us to review this time. With this, this is what my entire presentation is all about. We have already covered these parameters affecting NP identification last year, so I am not going to repeat. There is not much change into it. I'll ask SIRC's person to share the YouTube link of the last year. That's perfectly fine, or we can have another session some other time before 31st of March for this one. The one important part, probably yesterday you might have discussed, or the speaker might have deliberated, was this Supreme Court's order on status quo on NP identification in respect to Gajendra Sharma's case. Right now, that has created a ripple effect on this entire system. Now, one side you say that you should not have anything on a manual intervention. Other side, you have one of the decision which is creating more problem for you in implementing your basic this one, though it is from a different side. But as an auditor, what should you do, right? That's very important, because it's not happen that you are caught in between the two regulator or two agencies, right? So I would always say that whatever is there, please don't keep this revised LFAR as yes, no, thank you report. Please desist with such kind of thing. Report it in detail, what the audit process you have carried out, what are your observations, and what is actually you want to convey through the reporting format. Don't say yes, no, thank you, completed, right? Please don't do that kind of thing, otherwise you are going to have a lot of problems this time. This time the questions are very pinpointed ones on system as well, right? When you see that those questions, you will find that yes, the questions are very particular in nature. Okay, so what we'll do is we'll have three items discussed today. That is first practical aspect for conducting bank audit and case studies. We'll discuss a part of a revenue leakage, because this is in the new LFAR, that's one of the mention into it. So we'll understand how the revenue is collected and recognized into the system. And then we'll have audit activity through CBS and LFAR and tax audit requirement. That is on a quick glance through basis, because it contains certain reference material part into this. The last portion, that is audit requirement in terms of revised LFAR, I have tried and compiled the important amendments in LFAR along with the CBS requirement or the process to be followed from the generation of data or collection of data and to the end part. So that is also there. If time permits, we can have that as well, but I am a bit skeptical onto that side. So let's start with the second part that we have discussed. See, there are various issues that are there while auditing. One is the genuineness of credit. So what happens is whether even the IRAC guideline also says that whether any solitary credits are coming or any very few credits are coming, or the credits are coming in a normal manner. So we need to understand first whether the credits are genuine from genuine source or not, or only through the rotation of entries just to create a credit turnover so that you can circumvent the system. So for that purpose, we can have multiple set of things available. One is the review of book date statement and the other lenders, if any, and if disclosure is available in financial statement. And whenever there is a credit, just review it from where the credit is flowing in. Now, whether it is from a debtor, that is the name that is reported in book date statement, or from lender, that's the other bank, and ascertain whether, or from the group company or some other group company where there is no relation is there, right? That is first aspect. Whether the credit in the operating account originates from the debtor or through the unrelated party. If credit is through related entity, additional audit processes are required to be carried out. So one aspect is related entity. We'll discuss that onto the second or the third slide from here. Then comes the diversion of funds. First one was the credit side. The second one is on the debit side. Now, diversion of fund is a very problematic area this year also, and even in the earlier years, whether end user fund is properly monitored or not. And now that is creating a lot of problem for chartered accountants auditing for the banks. Reason being, once you have a disbursement available, the fund will immediately start going from the account. Many times there would not be any check onto the funds, where the funds went. Many of the time there will be a clearing instrument, there will be an NEFT or an RTGS carried out or through online mode. So gone are the days earlier when managers and the advance officers would have the privilege to review the checks where those are going. Now even they don't know, because there is an online system available. So what is important is we need to understand and review the list of creditors that are available in the book date statement on monthly basis, and then whether these payments are going to the creditors or to the other related entities. That is first part. Second part, assuming that it is not going to related party or not going to the creditors, where the funds are going. You have now Google available. Just search the name of that name mentioned into the narration side, where the funds went. I'll share one of the case studies as well, and you'll see that how we could zero it on the diversion of fund into that case. That will come in some after 7 or 8 slides. Then comes the very important one, is the related party transactions. Everywhere you will find that the diversion of fund will have an RPT issue. There are various sources for RPT. That is, one is financial statement, where you'll have an MGT 9, AOC 1, AOC 2, shareholder disclosure in balance sheet. Now, related party transaction as per AS 18 and Form 3CD. Now, I observed that a lot of banks are not collecting director's report, tax audit reports. They are only collecting balance sheet. Now, that is going to create more problem for the bank in assessing which are the parties which are related ones. You have multiple sources available. Just tag those sources and make a list of those ones. Why I'm saying this time? See, there are two aspects to it. One, you need to provide account-wise observations for 10 crore and above accounts, or asset which is or the advance accounts which are having total facility of 10% and above, right? Whichever is lower, on a specific manner, right? Not only that, you need to provide comment on 5 top standard assets account as well. Now this time it is asking for account specific information. Now what happens is the account might be good, but there might be an issue of a diversion of fund or the rotation of transactions for the smaller accounts or the other facilities. So you need to be very vigilant onto this time, and whenever you review an account, you need to prepare an entire note onto that account. Which are the related parties, what is the nature of business, what's the facility, how the facility was assessed, whether the assessment of facility and what is actual is proper or not, because otherwise it will be classified as SMS 0 in case that 40% clause gets invoked, right? Then we have other set of tools available through an online mode. These are all third party products. There are not only these, there are multiple. One is Toffler, one is Zubacop, where you can get a graphical and a structured report on potentially related enterprises. There are multiple identifiers. One is directors in multiple companies and companies at the same address. This is beautiful part of data mining. You get a list of, let's say in Zubacop, you get a list of companies which are registered at the same office address or in the same building. So probably you may have, like a building is of 10 floors and having 2 offices per floor. That may be 20 offices. You may get the other companies, but at least you can just scan through that which are the companies which are there at the same office complex or same office, and you can also make out that how come there may be some potentially relation. Only glitch or only limitation into this is that still we do not have, as a country as a whole as well, to relate on a shareholder basis. I am of the firm believer that the government should have that each shareholder should be mapped, and each shareholder should have an ID or a unique ID which would be shared, and thereby you can get an ultimate information on SBO, that is who is actually a beneficial owner, right? But that will probably take some time. Review of account statements, in-depth review in case of accounts with low turnover, few credit debit, account showing some stress, right? Now we need to understand and review the account statements. In case study, I'll show you a few of the cases, live actual cases, wherein because of this case, this identifiers, we could find other issues into that particular account. So please be vigilant onto this aspect, and there should not be any pressure on work, but you need to structure, you need to plan your work accordingly so that you can complete it in time. Haphazard planning or haphazard working won't help you this time, because it will probably happen that way. Then when you start drafting your LFAR, you'll find that, oh, we need to carry out this activity as well, and again you'll start the entire process. So please don't do that. Read LFAR, updated LFAR at least 3 to 4 times before going for audit. Make a note of it. What are the things that you actually want to do? Mony sir will also explain you which are the important ones, how to carry out audit. But please plan accordingly, otherwise it is going to be a hell of a job this time. Frequent TODs, this time also it is there in the updated amended LFAR. Assessment of fund requirement, whether the fund requirement which was done initially itself is wrong, or is there any issue with the party that he is seeking funds each time. Now that is going to create problems. Now which is the report, or how we can get this kind of thing? You need to simply generate a TOD report, TOD manual report from the CBS. Now from Finacle you can get it through TOD RP. Through other systems there are other reports available, either in a push reports or through the system. Now once you generate a TOD report, you'll get customer ID wise this list of TODs given during a period that you have given. Now once you review that, you will be in a position to understand that, let's say a particular account got a TOD for 120 days in a year. Now that is insane, because almost on, you can say, third day you ask for TOD. Now that is not going to work, and you need to report that part into LFAR as well. So your audit planning should include what you need to check and how you would be getting it, right? I have considered that part in the later part of the presentation as well, so probably that will also be useful to you. Then comes the relaxation of MSME. There are various relaxations on COVID, how it is configured in system. it is very difficult to configure a system or make your system running with multiple guidelines and guidelines going from one side to other side. We have seen what is happening in GST, right? That before you settle down, then you will have a new set of returns that are coming in, and then you will have all set of new problems. So it is not that the old problems are vanishing, it is only vanishing because you have a new set of problem created. So the same thing is happening with the banks as well. Then comes the other few other systems that probably in case of an import finance, export finance, we can make use of EDMPS and IDMPS access available to the bank. You can check the veracity of import transaction and export transaction through that. Banks, the branches would have a mirror image of IDMPS, EDMPS software. You can have that review as well. It will give you party wise, that is importer exporter code wise, IE code wise, information on import and exports, right? Then comes an open open portal which you can access is an IceGate portal, right? Now IceGate is a free access available wherein you can get an information on limited information on bill of entry as well as shipping bill. So at least you are in case of an export finance, you can at least be sure that yes, the exports have actually happened, right? Otherwise you have a lot of issues that there are no export, only fake documents are there and you got the limits. Then comes the Vahan system, Vahan portal, that is for auto loans. You can review that whether vehicle loans, whether loans have been sanctioned against the type of vehicle and whether the same is matching with what the systems are. I have shared one of my experience with various branches. I am sharing it once again here as well. In one of the case in northern India, a loan was sanctioned for about 70 lakh of rupees. That was for Audi or a Jaguar car. The payment went to a dealer, so-called dealer. But when an auditor just sent an SMS to Vahan with the registration number, it turned out to be a three-wheeler. Now in that scenario, then they started inquiring that, and then they found that the dealer itself is an Hawks one, right? So dealer created few this letterheads, and with the connivance of the branch staff, they could siphon off the money. So whenever you verify that this vehicle loan, and if the bank has not carried out this activity, you carry out and keep it in your working paper. It is there through website as well as through SMS, right? Then you have an FCRA online services, various cases wherein this KYC AML issues are there with respect to certain set of trust. You can find out that on an FCRA website that there are trusts which were registrations have been cancelled or they have not filed their financial statement with FCRA. Just check that whether they have any accounts are there as FCRA accounts are there into your branch, and whether proper KYC and AML compliance is carried out into this one. Now, why I'm speaking on KYC AML this time? Because it's there into your LFAR as an updated manner as well. Then comes you have an open system access with MCA, you have a GST, you have an income tax limited information available through online mode. Then comes the willful defaulter and a suit filed cases. You can go to the suit.civil.com and also refer to bank's website, wherein you will find that willful defaulter and suit filed cases are reported therein. One of the important and an excellent system for by 5 crore and above limit consortium or multiple banking account is Acrylic database. Acrylic database, each bank is required to report on monthly basis the status of the account on Acrylic portal, right? So if any of the bank has reported there is incipient stress or some downgradation, then the other bank is required to start reviewing that account, as well as they need to be on their guard that probably it might come to their bank in that issue as well. Then comes the credit rating report, important one. Why I have included this time, you need to report it into the LFAR, that credit rating reports whether credit rating is updated into the system. Now up to last year, a lot of banks, what they used to do was that if the credit rating is poor, very poor, then what they'll do that they'll say that the party is unrated. Right. So now this time you need to report it that whether credit rating report is obtained from an external RBI appointed agencies, and whether the same is updated in system and no manual intervention is there. Right. So you need to now understand first that with where the credit rating reports are applicable and whether they have obtained or not. Then comes the CIBIL and the other TransUnion other scores, and there are multiple other reports available. Then comes the GST data. Now this gives you a very good information on the customer and that is the borrower and its particular you can say profiling with respect to GST filing. Because if a person is not filing GST returns on time, then there might be some incipient stress into this one. You can see there is an app developed by Iris Software in partnership with FICCI. The name of the app is Peridot. You can generate a mobile app, and it's a fantastic app. You can just scan it across the number. You can just open your camera. Once you open an app, just press on a camera, just put it onto an invoice or wherever the GST number is printed. It will automatically capture and it will give you an entire information. Though the same sourcing is same from GST, it only gives you the handheld information, immediate information, rather than going on a website and doing that part. It's again a data mining part. So you can use these kind of multiple things which are outside the CBS. Within the CBS, we'll discuss into this one. Quickly moving through the case studies. In this particular case, what has happened was the customer, the borrower did not have any credits coming into his account. So what did the bank do was that they sanctioned a new set of loan in addition to the existing one, and they added the disbursement amount into that particular operative this one only account only. So with that you had a credit. So as against 2,50,000 of interest charge, though there was not a single rupee amount was collected, but because of the disbursement of new loan of 10 lakh of rupees, it was way beyond the interest application, and the account was not classified as NPA. Now it was not only one account, there are 4 accounts of that particular customer. So please ensure that from where the credit is coming, it cannot be from the sourcing of a new loan. System will only consider the credit part. System will not be in a position to understand what is the nature of credit. Otherwise, what will happen is we will assume that yes, system is properly functioning, whereas these are the cases, there are certain set of things where you manipulate into the system and you find that the account is performing. Then comes the TOD in a current account, wherein from that you got a fund and you funded the borrower account. Now this was actually a chain of case. I have just given you a one screenshot. The chain of case was this way, that for 3 quarters this entire thing was happening. So what was the issue? Issue was that the borrower was not in a position to repay the amount. It was all going into overdrawn, and overdrawn was also because of this interest application. So what was done on the first stage, that is first quarter, was that a TOD was given in a current account on 16th of March, and then it went into that because of that TOD, that they debited the current account with 10 lakh of rupees, and it went into the borrower's account. Right now, the borrower account got a funding. So borrower now is less than 90-day overdue. The new, that is the TOD facility, will have a start date of 90 days from that 16th of March. In the next quarter, what the branch used to do was they used to give TOD into 2 more accounts, one to square off the current account and other one for borrower account. Then the third quarter they started doing for the third 3 type of accounts. But then we could find that this is what the things they are carrying out on a recurring basis, and these accounts were then classified as NPA. Now, when you see this particular one account, now it is a screen grab from one of the account wherein there was not, the transactions were without any visible economic benefit. The credit is of 9 crore, debit is 9 crore, 3 crore, 3 crore, 9 crore, 9 crore. Now there were about 12 transactions, about more than 100 crore transaction within a span of 20 minutes, right, on 31st of March. Now the issue was that what's the case, and if such thing happen, now in this case, particularly in this account, if it is a borrower account, then it will be counted as 100 crore of this credit turnover, right? Whereas the debit is from the same, credit is from the same. So the in actual speaking, the customer had only 9 crore with him, but because of this chain of transaction, he could generate the credit turnover of about 100, more than 100 crores, right? So if you find that such kind of transactions are there where you have an immediate debit post to credit, and that to credit is originating from the related account, then please see to it what is the rationale behind it, whether you want to, whether you can consider this as a legitimate credit so as to ensure that whether the NPA identification should happen or not, or what you can do is you can ignore it and then just check the applicability of NPA norms. If the norms are kicking in while excluding this, then you can, it's a fit case to be taken as non-performing, provided the other things are matching with IRAC norms. Then comes recovery, and the credit is shown through cash deposit, whereas the cash deposit actually originated from a TOD. So this was also a classic case, because generally what happens at the moment you have a cash recovery, it loses the entire audit trail, right? But in this case, what happened was this account was having an interest debit of 7,45,000 rupees, and there was no enough, there was not an enough credit into this one. So what happened was there was a sudden credit of 6 lakh rupees in cash into this account. This is the screen grab from here where we used to consider this post balance sheet recovery as well. So what happened was that there was a sudden collection of 6 lakh of rupees. Now we found it very we could not digest that how can there be a cash of 6 lakhs immediately coming into an account who is not even making payment in any of the about more than for 3 months. So what we did was we scanned through the teller accounts. So there were 2 tellers into that branch. When we scanned through that, is there anyone who has withdrawn 6 lakh or the bulk amount? And we immediately found the 6 lakh withdrawal from a current account. So we went through the current account. There was no balance in current account as well, but because of a TOD of 6 lakhs into that account, that current account holder could withdraw 6 lakh of rupees of cash, and then he deposited immediately into the other. So immediately next transaction was into the deposit into the borrower's account. Now likewise you got a credit of this one, and this account was saved from NPA at least by the system. So please be very sure when you check such kind of thing. Now this is a classic case. Again the same, the like you have seen the before one, but this was on a larger scale. There were 3 accounts having problem. Those 3 accounts were almost practically turning into an NPA. The only hitch was that there were about 48 lakh of rupees credit into those accounts on 30th of March. Now system did not identify this accounts as NPA. Reason being there was enough credit available. Now the issue was on the veracity of the credit or the genuineness of credit. We scanned through from various aspects. We also found from the first look that yes, this are looking at genuine one. But then when we scanned through the teller account, we could see the entire picture. At 1701, 501, the cash counter was closed and the balance was transferred to main cash. However, at 514, in the evening, the cash started kicking in. So 650, 7, 350, 8, 5, 5, 7, 6. So by 5:18, that is in 4 minutes, there were about 8 transactions aggregating to about 48 lakhs of rupees in cash deposit. From 5:27, you had 2 customers ready for the withdrawal. So 2 customers withdrew about 24 lakh each, and at the end of the day, there was nil balance in teller account. So it was a perfect the movie scene. It was there. Probably at the branch also it might be there, that three persons were carrying a sack full of cash and 2 were ready with the empty sack, or probably they took it with the sack itself. But it was not getting through. So what we did was, the persons who actually withdrew the cash, we checked those accounts and we found that they also hadn't had any money. So how come they could withdraw 24? Then when we found that, it was found that it was through the TOD granted into these accounts, and then the entire picture we could make it as a snapshot to this one, right? So please be very vigilant onto these aspects. Now this was the one on the end user fund. 3.5 crore or 4 crore loan was sanctioned to one of the person under agri loan scheme. Now under an agri loan, you have got at the subsidized rate, all the documentation and everything was perfect. That person was having a large tract of land. But when we saw that after disbursement, where the funds went, not a single amount went for an agriculture purpose. Major chunk went into the immobile property, that is real estate business of that related person. One chunk went into the check was issued in favor of an Audi dealer, that was for purchase of an high-end Audi car. And the benefits, if you see into the account, you will find that you got a lower interest, you got a longer time period for NP identification. Had it been the case that you have taken this loan for an Audi car, you would get a 90-day time only. Into this agriculture loan, you get a time period of 2 short crop or the long crop loan, right? So even your Audi loan is also based on the crop that you might be growing, right? So these things are happening. And the most important part was that a lot of political parties are now spulging about the entire money on loan waivers. So probably they may get a waiver and they may get this car and the real estate business on the free as well. Nobody is aware of how such kind of thing can be allowed. So whenever you find that there is an loan which is at a lesser rate, that is agri loan or an export packing credit or a packing credit in foreign currency, just see the utilization part as well. Not only those, even the normal loan also, please see the utilization, right? It should not happen that it is utilized for some other purpose only. A lot of this time I got a feedback that a lot of borrowers took COVID related additional facility and they have not utilized for the business. Instead, they have invested into share markets, because at that point of time, share market was at a very low price, and then they started making money out of those. Please see to it, you will be in a position to get some info out of it. Then came the system issue. I cannot say the system issue, but the updation part. There was a large consortium advance, about 5,500 crore account, with having a security of about 4,000 crore. The bank where we were auditing had a share of about 10% into it. But when we saw that the provisioning of that loan, we found that there was not a single amount of provision created on an unsecured portion. So when because everyone was aware that there is some unsecured portion into this account, when we saw that how it can happen, when we saw into the system, we observed that instead of updating 10% of 4,000 crore, that is 400 crore, in system they have updated the entire value of security, that is 4,000 crore. In that scenario, what will happen is there won't be any unsecured portion at any point of time. So please ensure that in case of an consortium advance, only the share attributable to the lending bank should only be updated into the security part. So these were the point. Sir, how much time do I have now?
Another
Yeah,
15 to 20 minutes, sir. Another 15 minutes, sir.
Okay. Yeah, thanks. Then comes, let's understand on the certain revenue leakage aspect. Primary revenue for bank is interest on loans and advances. Charging of interest is actually completely automated. However, the processing is based on certain important parameters. We need to understand this aspect in light with this year's change into LFAR. So system parameters fields which affect the interest component should be thoroughly verified. And I would say that I'm saying this since last so many years, but this time I got a backing of LFAR. So I'm very much happy that yes, I got some backing of what I was talking about since years. So let's now understand first. See, you have various parameters available on interest side. So you need to first understand. One aspect is interest table. Second aspect is interest rate. Third aspect is the preferentials, right? So understand first, interest is generally charged where the rate is derived from a table. Now, what is table? Now, table is you have a generic table available. Let's say MCLR. Right, you have a table for an MCLR. Someone will get a loan at MCLR plus 2%, someone will get at 1%, whatever is the case, right? So either banks would have either two systems. One, MCLR plus 1 would also be through a table, or what the banks would do is they'll accept or they'll update MCLR table and they'll add the spread, add or deduct the spread, and they'll mention there into the parameter value. So system would compute the interest derived from MCLR table, which can be updated periodically, plus or minus spread, and will arrive at the rate of interest. Right? This is how the system happens. Now, what happens that there are plenty of issues into this. In sanction letter, you have got that MCLR plus 2%, assuming that that comes at 10%. Right? Few of the cases, the banks would be updating directly 10% into the interest rate and will not call any of the table. In that scenario, what will happen is whenever there is a change in MCLR, it won't have an impact into this financial statement and the recovery of interest part. So that's grossly wrong. So that cannot happen. So what you get is effective rate. Effective rate means rate derived from an interest table, add or less your spread, and then you have a penal interest table as well within the interest table. Now, if some set of conditions are not fulfilled, then the penal interest will also start kicking. Right? So that you need to check it from sanction letter, that which are the events and whether the penal and what is the rate of penal interest. Now, interest rate derived from a table side. Now what happens is that customer is a good customer, right? And where the bank would like to give a concession or a preferential. Preferential can be in form of a penalty or it can be in a form of a benefit, right? So you get a preference. If I say that my debit interest rate customer level preference is negative 1%, then in that case what will happen is my total rate that is coming from MCLR plus spread is coming as 10%, but I'm saying my as a customer level preference minus 1% under debit, it will be considered at 9%, not only in one account but in all accounts. So now you have two preferences available at customer level as well as at account level. Whether banks are using this, that is the first thing that you need to understand. Now, many of the chartered accountant friends, whenever I explain this to them, they simply say that, sir, it is too technical and we cannot and we don't have time in statutory bank audit to review this kind of thing because it's too technical. Probably some young members or some members who are accustomed with the system, they can verify it in a very fast. So one of the aspect, I won't say that it is a conclusive one, but what you can do is you can generate an interest report, right, for a period. So what I'll do is I'll generate an interest report for an entire year or a month on month for an account where I would like to verify whether interest rate is correctly updated or not. And second aspect is whether there are changes happening according to the changes in MCLR rate. Two aspects are there in LFAR. So what I'll do is I'll generate a report. There is a command called AINT RPT in Finacle, and in Finacle 10 there is a command called HINT PRF as well. Right. So these are two interest proof report. In TCS banks, you have product sheet available. The same ways you have report available in FlexCube as well. I have given my this one background material. I have forgotten to share one more material. I'll share it once my lecture is over. Jalpati sir, you can upload that material as well. That is on a narrative form. Because I was in and out of a meeting today, I could not share that, but I'll share it across to you. So you can share along with this presentation, you can share that part as well. So what happens is, when I generate an interest report, I get a rate of interest at which the rate was the debit interest has happened. Now I can at least review that what is there in sanction letter. What was the MCLR rate or the history of an MCLR for an entire year, right? And what is the spread? Whether the interest is correctly charged or not, that at least I can make it out, right? So you need to structure your audit plan in a proper way. You cannot go haphazard way. Otherwise, you will end up into reporting nothing or probably reviewing of nothing. So you need to structure it. You need to first source information from sanction letter, then you need to generate information from system, and then you need to compare in a specific manner based on a static information available to you from 2021 MCLR changes. Right. So this is what is entire gamut of the interest part, master part. Now, if you want to see that, are there any changes into the interest table? That is the manual changes made into interest table. There is a command called INTTM in Finacle. Whereas in TCS Bank, the same command is there with interest rate history. But the difference between the two is in Finacle, it only recognizes the changes made in table. So I have changed from one table to another, it will have an information. Whereas in TCS Bank, you will find all the changes, meaning thereby once you have a change in MCLR, consequent to that, there is a change in the interest rate applicable into the account, you will find that change into this particular information as this report interest rate history as well. So you need to have again this one MCLR changes, date wise changes, whether it was an upward one, downward one, or what was the rate at that point of time, and you can map it with whether it is in consensus with this one or not, right? So that's how this entire interest part comes through into the system part, right? Now, these are a few of the reasons for non-application, wrong application of interest in CBS. Due to paucity of time, I'll not be in a position to discuss these, but we have discussed the important part from where we can have interest rate related part. But it is self-explanatory. We can review on a various the narrative form, and we can check that part as well. Then we'll be quickly going through. This is all foreign exchange part. On an office account, this is also a very risky one. Yep, I'll just quickly go through one of the slide and I'll inform you how it is structured and how it can be very useful to you while doing an audit. I have created set of slides about 25 maybe in line with LFAR as well as tax audit requirements, right? And from where we can get an information of that audit activity. So what we can do is Mony sir will be discussing on an amended LFAR, right? He will be discussing on points to check, right? And you can create one more column, or you can add it up certain set of things that yes, this part is required to be checked from this system, from this side. So it will become an exhaustive audit planning documentation as well as reporting side. Right, I have included all systems into this one, Finacle, both versions, banks and FlexCube. So in cash, what to verify? Cash balance is on 31st of March, cash balance on the date of verification, or if there are any Friday statement or anything, right? I have just included earlier, we used to have a Friday statement certification as well. So from where we can verify? In Finacle, you can go to ACLI option, Finacle 7. In 10x, you can go to HACLI option, and you can go through HACL INQ as well. In TCS banks, you have various reports available. In FlexCube, you have various portions available. You may have some set of other commands which you find that during an audit. So what you can do is you can just add those command into your audit planning. So next year you will have that benefit of that. See, this is how the material or the documentation we can prepare. You cannot have from day one, you cannot have an exhaustive material or a foolproof material. It will get evolved over a period of time, right? So this entire presentation also actually evolved over a period of time, right? From 2005 to 2021, right? It has been about 16 years I'm dealing with this software, and that's how I could make this presentation. So it's a continuous process. I mentioned I updated my presentation as well into that way. So please prepare this entire manual in a structured way with the system support wherever required. So this is on cash. Then comes balance with RBI, SBI, and other banks. Then come advances. So in advances, you can see sanction limit or a drawing power setup. Now this year also you have a specific notation onto whether DP is correctly set up or not. Right now, it is a very dangerous question. Only a few words are there. How to compute DP is a $1 million question, because a lot of banks have different set of processes in DP with respect to the paid stock, or the whether to remove reduce creditors, or whether to reduce creditors up to the level above the level of the creditors that they have mentioned into their CMA data, right? So that's how the things are. But we need to have things into our hand. We need to create a template to compute the DP as well. See, please understand this, because you will be writing in LFAR, yes, the DP is properly computed, or no, the DP is not properly computed in following cases. At that point of time, you need to mention what's the policy of the bank, how the DP is to be computed in these cases, right? Whether margins are correctly set up into the system or not, where the system is computing drawing power, right? So in that scenario, we need to be very particular about choosing this proper process of auditing along with the systems, right? So for an history side, you have ACL HM, you have account master, you have LTL in Finacle, you have in different systems, you have different history reports available. Not only this, you can use a command for security register maintenance, because through which the debtors stock statement would be updated. So please review that part as well. It will come in the second or third part, right? So this is what account and customer master setup. This is what I was referring to years before, that yes, we need to verify this, otherwise we'll have a problem. And this time we need to have a certification or probably reporting onto this sorry, this side as well. Right, so now there are multiple this one, and it's a self-explanatory one. I kept in detail only, though generally I don't like to keep points in detail into presentation, but since I am aware that many of the members are using this as a background material, I kept in detail only. Though whatever is not mentioned in detail in this presentation, I will be sharing one more file with sir, and he will be sending that or hosting onto the SIRC website. So this is what the things are. This is covering entire LFAR and tax audit requirement, and where you can make use of CBS. These are few of the important reports that we will be we are required to review. That is, one is an exception report, where we need to check various exceptions, that is balance exceeded account limit, manual debit to income account, validated transaction, manual entry for standing instruction failure cases, instrument passed against clear. Now these are very important ones. Please review the report minutely. That is, other one is irregularity report, accounts where interest code is 0 or the collection flag is set as no, need not necessary that you will find all such reports in all the banks. But these are the general reports that are available generally in all the banks, and we can make review of those. Now this is very important report, and we must have this time, because there are a lot of things hinges onto this report only. Report containing all advance account with limits, including non-fund based limits, right? Please understand this, because you need to include set of accounts which is going beyond 10% or 10 crores in total, that is FB and NFB. Generally what is happening is that we get only FB limit report, not the NFB report, right? But we need to have this. If it is not there, you need to generate or compile something, because everything is hinges onto this. So if your base is not proper, then probably you may end up reporting certain things, or you may skip certain set of accounts where NFB limits are higher and FB limits are lower, right? So please check this one, right? Report on probable NPA or an red flags accounts or an health code account or a special mention account. This time it is going to be a very challenging task, because we need to mention whether SMA 0, 1, 2 classification also correctly done into the system or not. It's a Herculean task actually, because SMA 1, 2 fair enough, that is only on an overdue side. SMA 0 has certain set of conditions which are outside the system. Now what will you do into that? It is going to be a nightmare this time, because you have specific questions where system is not taking care of certain set of things, right? Report on NP account, this is also very important report. Do consider this report, that is 31st of March 2021, as well as obtain the report of 31st of March 2020. If possible, obtain all the reports of quarter ends. You will require that part. This time lot of data crunching is required. I'll just inform you how this is done. I'll not go into detail, because Mony sir will be taking up, so I'll not be barging into his side. It was amended, and there are various guiding principle on this one. Now these are the important requirements, and what I have compiled, and what are the requirements of the audit processes. So these are the important ones only, not all the changes, right? So what you can do it from system side is mentioned on the right hand side, right? This is the only thing, Mony sir, I would also suggest you, whenever you are speaking with this particular aspect requires account number, account name and reporting, but it should be customer ID as well. Reason being, there can be multiple accounts where you want balance of funded and non-funded in one line. So it cannot be that way. It has to be on customer ID. It's not mentioned in LFAR, but I feel it has to be on customer ID. Or what we need to do is, you need to write multiple account numbers, account name also repeat, and at least cost ID should be reported on with account name as well. That is what my suggestion. Members can also take it further. This is how the things are. This particular SMA one I was referring to, there are various conditions. Now these are the conditions. Delay in submission of stock statement, that's perfectly fine, it is within the system. But other stipulated returns, financial statement, are out of CBS, right? You cannot ask, you cannot expect CBS to mark an account as SMA 0 based on this one, right? Then comes you have this falling short of projection. That is again an out of CBS. So please review that, whether it is SMA 0, 1 and 2 are properly updated. See, there are various things which are out of CBS. You cannot expect CBS to take care of everything, right? Now these are the points. One is FCNRB as well, right? So that is also mentioned. If you have any questions, you can post it, or sir, we can take question. Sorry, I have exceeded my time.
No problem, sir. No problem. Selva,
Just
please.
Some 10 questions are listed out, sir. We'll take it for you.
Sorry, sir.
We have shortlisted.
Selva will post the questions.
Yes.
We'll take one by one.
Sir, is my screen visible?
Yeah.
Yeah.
Oh my goodness, this many questions.
Yesterday.
Oh no. Starting
Yesterday
with
up to 42 yesterday's count.
because last time we had only a session on Q&A at SIRC. It was
Okay,
also
okay.
for 2 hours. Yeah. Not an issue.
The details of advances in most banks. Can I read out, sir? You can.
Yeah,
Yeah.
sir, please, sir. Parmada, sir.
The
Excellent.
details of advances in most banks are given in 40 plus columns in a for A4 size paper, wrapping the columns in say 3 or 4 rows. Entire data of each borrower will be in 4 rows of 10 columns in each row. The next borrower in the next 4 rows and so on. How to convert them in Excel sheet in 1 row per borrower with 40 columns. Yes,
Yeah, sir, there is a command. I don't have time right now. There is a command to merge this one. What we can do is, I'll request Jalpati sir, either you talk with Premnath from Hyderabad or Shiva Kumar. I think his partner is Shiva Kumar.
Yes, sir.
They discusses this, right? Or we can have a session onto this one. This is an excellent question and this is very pertinent. Reason being, the main advances report, right, is the need of an hour, right? Because this requires certain merging of rows and then splitting of columns, right? So it requires at least 15 to 20 minutes of deliberation only on one report.
Yes,
And
yes,
for
yes,
that
sir.
reason,
We are having exclusively for the seminar, Excel seminar on 16th March.
yeah,
Maybe
okay.
most probably
Just preserve
Tuesday
this
evening we
question.
are having the 3-hour
Yeah,
seminar.
just preserve this question. This is a valid question, so that and inform the speaker in advance so that they can include this part, or we
Yes,
can
sir.
have
This
some.
question will include.
I can also show, but then it will take about 15 minutes, sir, and that will be
No
barging
problem,
onto
sir.
some other.
Tuesday
But
evening we will take care of this question.
respond to.
Yes.
Please
Yeah.
mention the important concept of practical trainees to keenly do bank audit using MS Excel.
Okay, I'll say that don't restrict yourself to Excel first. My perspective is this: that first you should understand the system. Excel is a secondary aspect. Once you can review the system, then you can work on Excel. You cannot completely take a dump from an entire system and work on an Excel. It won't happen. First, you need to understand the system, how the system is designed and how the system is behaving. Excel is just a part, and that is where I think Premnath is doing this one, and Shiva Kumar and everyone are working on that side. We can share. I think in SIRC also there were a lot of presentations that has happened, and it's there on YouTube as well, right? You can refer that part. There are plenty of concepts and plenty of things are available in Excel which you can use on. Only glitch is this, that multiple banks have a multiple formats, right, whereby it is creating certain set of issues, right? So I would say that I'll club this with the previous question, that please include that, and this is the need of an hour, and that these are valid questions. Yeah.
The questions related
How
to
can-
Excel. Questions related to Excel, we can have the Tuesday
Exactly.
evening.
But just inform to
Single
the
session
that
we have,
speaker as well.
that we can handle on
These
the
were the
Tuesday.
questions
All
that we
questions
are,
we will send to the speaker. Yes.
how can we be assured that bank is compliant with full automation of IRSC norm, and from which report? That's excellent question. Now, what I'll say that this is not a simple question to answer. What I'll say that have see, we can start it with like this way, that assume that everything is automized, and then start working on an exceptions. So you can have your own testing. The way I've discussed, though I could not discuss it, I've kept a certain thing in my presentation, right? So that follow that instinct on a normal basis. If you are a central statutory auditor, you have an access to the system on a more larger scale than what we have it in the branch level, right? But what we can do is, we can take sample first for 5 or 10 accounts and understand whether the system is downgrading and upgrading an account based on certain set of parameters. Again, it is not a conclusive one, right? You need to have multiple set of audit processes to be carried out. One is that whenever there is a downgradation, whether it is in consensus with the system transactions or not, right? There are certain set of, see, there are in particular the CBS, you have thousands of commands, and these commands are predominantly or by and large are common, but these NPA are updates or enhancements done into each bank differently. So nobody can tell you with a surety that there won't be any command whereby you can skip an account from NPA day end process. Fair enough, right? So what we need to do is, whenever we find account which is having an overdue, or from an advances report where about 16 installments are due, and we find that actually theoretically only this number of installments overdue should be 12. So you have 4 overdue, but still the account is not marked as NPA. Then select it for a sample. So what we do is, from an advances we select sample on an exception, right? Where there are certain in TCS Bank, there is an excellent report that is coming up with the codes 503, 600 or kind of thing, right? Now that each code denotes a different set of information. We can have information on that as well, that each exception code denotes that part. So what we do is, we select those accounts, we carry out detailed scrutiny irrespective of the fact whether it falls under 10% criteria, top 5 standard account or not. These are from an IRSC perspective, right? So multiple processes: one, downgraded accounts, upgraded accounts, then this exception accounts, right? And then what the system has done, and in case of an upgraded account, whether entire overdue is collected or not. So it's a set of processes. Single report won't give you anything. If it is going to give you that way, then there is no need of an audit. At the central team level, they can generate the report and they can identify those things. But yes, you have lesser tools available as a branch auditor, and you have a wider set of tools available at a central level where you have better access to the system. But at a branch level, you can carry out multiple audit processes to report into such kind of thing. Yeah, sir.
Correction 3, sir. LFAR
Yeah.
for large irregular advance accounts is obtained by branch auditors from branches dealing in large advance. Is there any advance threshold to determine such branches? I understand the advance threshold in 100 crores of fiscal.
Yeah, that is 10% and 10 crore, whichever is lower.
From where can we have updated LFAR format?
Just search notification of 5th of September on RBI website. You will find that.
Funds diversion can straight away be identified and calculated from the face of borrower's balance sheet. Trying to identify funds diversion from bank account operations is like trying to trace out for a rat from the mountains. Educate the CAs how to identify the fact of funds diversion from the face of balance. That would help the banks to have the control of.
So there are multiple points into this one. On the face of balance sheet, what you can do is you can see where the funds are going through. That is on the loans and advances. I would always believe that loans and advances, both on an ICD as well as that is on a liability side as well as on a asset side, that's where we need to focus more on to. But the problem is this, that we have observed that the balance sheets are always, or majority of time, is clean one. Reason being, the transactions have been squared off before 31st of March. And once again, you have such kind of things happening. So I'm not saying that you need to verify only from transactions. My perspective was very much clear onto a verification from balance sheet and coming up to a transaction one, right? Why I'm saying transaction? Because at the branch level, you have information available up to that only. You cannot go beyond what is there into this borrower's this one. But yes, financial statement is a good tool available from where you are taking money, from where you are investing into. Are you investing into buying an inventory? Are you investing into your plant and machinery? Or you are simply giving a loans and advances, or even an interest-free loans to the related parties or an unrelated party? Maybe you may not have the information on an unrelated party, right? But for this, I'll request the member to refer to an ICI publication. There is a publication of early warning signals issued by Committee of Information Technology 3 to 4 years back. There are 33 EWS. Under that 33 EWS, you have this thing mentioned into this. So I would request all members, not only this particular member, I'll request all the members to download that, right? early warning signals, right? There is a publication of ICI, or what we can do is as an SIRC, you can upload it as an background material, or at least a link of that, right? If that is not available or not traceable, you can just ping me up, sir. I will send it across, right? Okay.
What is the app for getting GST particulars, invoice details? Please repeat.
No, sir. There is no invoice detail available. It is only the details available. This one, only the information about GST registered person. It is not going to take information from any of the personal sources, right? It's an open-ended app. It is Peridot, Peridot. It's not available on Google app. I need to check as well. Wait a minute, sir. It is there in my mobile. I don't know how. IRIS Peridot GSTN search. So I'm not sure whether it won't be. It is by IRIS Business Services Limited, right? Okay, sir. Next one.
In case of CC from new loan, what should we do? Credit, in case of credit.
Again, yeah, that's again an issue that we face it on a day in and day out. If it is turning out to be that way, that the new loan was sanctioned, the funds were credited to CC account, assuming that we generate an account statement and we ignore that for a particular time period, and we find that otherwise CC would have a problem because of a lower credit turnover or no credit, right? Then it is based on the fact we should be deciding upon. I would personally feel that we should ignore that part onto that, but again I leave it to the member when actual case is there, whether it is for a specific purpose or not, but it is a primary case for additional review onto that side, and it will create a problem in case there is a low credit turnover or no turnover into CC account.
The general practice seen is to bring down the outstanding within the sanctioned OD limits for a single day during the period of 90 days and claim that the interest has been serviced. How to view this?
So I skipped my first part of the presentation. It contains this kind of issue. Because of the paucity of time, we could not discuss this in detail. Sir, that is a perennial part that can happen through various ways. See, system will function in a proper way. When you try and pinch a system, right, to work in a specific way, right, and system may not work in that way, so you can bypass the system through that means as well. That's the fallout of this human mind application into a wrong way, right? But that's the issue. So what I'll always say is that select a sample from an exception. Again, that's not a 100% of a strategy, or you can select or everything you can find out whatever are the cases. Select from sample exception side, right? And from an exception, it should be like that way, that account which are of a major value, right? Just review. So what we do is my father does a review of an documentation, and I'll be sitting onto the system. So whenever he reviews the document, meantime I'll check the account statement, whether transactions are coming through, whether transactions are from a third party transactions or routine only. So I'll give him a feedback. So he'll review the document, he'll give me some feedback while reviewing the file because of the communications with the borrower, right? So likewise we can have it that way, but that's the issue that is there, 90-day issue.
Sir, for paucity of time, we will have long questions, sir. And
yeah,
please share your mail ID so that please also respond to them.
And not an issue, sir. In
Yes,
any case,
what is-
there will be, yeah, there will be this institute will also come out with audit this query while doing a bank audit. There is a group that is formed, and till last year I was also part of that. So member can also send a query while carrying out the audit, right? So the members used to the member of the group used to reply to that, right? They can send it there, or you can send me to this as well. I'll in a day or two I'll send you the response, and you can forward it to the respective member.
Okay, sir. We will let the members know your mail ID. They will get their queries clarified, sir.
Yeah, mail ID I have given in my presentation at the end. It will be there. Right.
Sir, it is there, sir. We will send across.
Not an issue. Only one question: how to know command in CBS? For that, I am giving you one more background material. You can upload that. So probably that would be more than sufficient.
Okay. Okay, sir. Thank you.
Yeah.
Thank you very much, sir. Thank you very much.
Thanks.
Thanks a lot, sir. A great job. And I think time was very short for you. We can
Yeah,
understand. We will definitely call upon the same topic for next time, and also we'll disturb you for presentation.
Sure, not an issue, sir. Not an issue.
Thank you. Thank you. very much.
Thank you, sir. Thank you, sir.
We'll
Move
go
on
on
to
to
the next technical session.
And Sir Mony, Anandhasivan sir, sorry for being delayed. This one. Now it will be new LFAR and other certificates. The topic by CA Mony Anandhasivan. I'll take just 1 minute to introduce him. He's 55 years and practicing chartered accountant for the last 27 years. Partner of Shankar and Murthy. He has authored a book named Handbook of Handholding GST Compliances and taken orientation sessions across the state and also on various other topics. An article on bank audit published in SARC newsletter for the month of April 2013 and is a part chairman of the Calicut branch and faculty for bank audit seminars for 2021 conducted by so many branches across South. Regularly present the budget and other financial matters in news 24 channel also. The past president of Rotary Calicut East and also past assistant governor of District 3210 of RI. So with this, I present before you, Mony sir. Sir, please take over the proceedings.
Yes, sir. Good evening, all of you. Very auspicious occasion that we are all together and more than around 1,800 members joining together from the SARC. Congrats to the chairman for having organized this seminar in a very nice manner. And we should always be elevated when the SARC is calling us for any seminars as a faculty. In fact, Jalapati sir and myself had gone to a lot of places as faculty. He has taken me when he was the regional council member also. Now he has been elevated to the chairmanship of the SARC. And thanking Jalapati sir for having invited me into this great forum. And I should also thank Joman sir from a very, very ferocious, I will call him as a great orator. And we will be hearing him for any amount of time. We can hear him. And he's switching over from language to language and things to the matters and matters to the facts and facts to the anecdotes. Everything is very, very swift and fast so that we love speaking and we love hearing. And Panaraj, of course, a very good alignment between the secretary and the chairman of the branch. So now I don't want to take much of your time. I will directly go into the subject. Now, Selva, can you please share the screen?
It's already you're sharing the screen. Just open the Word document. It should be this. I'm seeing your screen, sir. Just blank. Visible, sir.
Visible now?
Yes, sir. Yes, sir.
Yes, sir. Yes, sir. Yes, sir.
Yeah. Now, what is more important is that we should be very seriously approaching this year's bank audit because even Kuntal Shah was saying that the LFAR has created a lot of hassles, or I would say that it has made the chartered accountant's job very, very responsible this time. If the LFAR earlier was only a document of a peripheral report to give about the internal controls and the other accounting aspects of a particular branch or the conduct of the branch, This time it has become very, very difficult, and it has become so subjective. I would call it subjective. Earlier it was totally objective, where you were asked to do only a peripheral reporting about the conduct of the branch as a whole. But this time they have made it a point from various experiences, as Kuntal Shah has very clearly said, from the Nirav Modi experience and other experience of the banking sector. They have made the auditors responsible and committed in respect of reporting. You cannot escape reporting from the LFAR. If you are going to fill the LFAR, you will find that if you go through the slides which we are going to discuss from now, you will find that the LFAR requires, insists, and even instructs the branch auditor to report on certain aspects which you will never be able to do in a half-assed manner. You have to do a purposeful and particular job, and the job has to be very clear in such a way that your vision and the focus has to be very clear, and you will never be able to escape the responsibility also. So when we go through the slides, we will be able to come to know. What I have done is that the additions, modifications in the LFAR is all given in the red. This time in the LFAR and the cash verification, they have added the ATM cash. ATM cash already was there. What we should understand at this point of time is that ATM cash is there in respect of those ATMs which are connected online to the branch. So there are ATMs which are offline ATMs as well as online ATMs. Offline ATM is controlled by the central hub of the ATM hub. So when you find that your branch balance sheet is having an ATM cash balance, you should be asking them to take the scroll of the particular ATM on the lasting final hours of the banking transaction, and you should be able to match it with the entries which is coming in the balance sheet. If the entries requires any MOC or any reconciliation, you have to do that reconciliation and do it. Now the other question which is pertinent here is that in respect of ATM cash, there are certain designated branches who are allowed to give cash to the ATM replenisher. That means that the ATM replenishers are outside agencies who will be replenishing the cash on the different ATMs which are all offline ATMs. So the branch will be debiting the account, intermediary account, and it may be a CC account or it may be a current account where they will debit this particular amount which is disbursed to the ATM replenisher. And the replenisher, when he is going to respond to this particular transaction, this account will automatically get squared off because the ATM hub will take it over. So what we have to understand is that if you are given a branch which is funding to the ATM replenisher in respect of physical cash, you have to always reconcile the account with the ATM replenisher and the branch at any point of time. That is very, very important. Now coming to the second thing which is very, very important. Again, what I have told you is that this cash scroll generated in respect of the online ATMs has to be verified by the auditor. And this is again a matter of very, very important reporting, where if the scroll is taken, supposing that your day-end process starts at 6 o'clock, ATM is 24/7. So what happens is that there will be always tend to be a difference between the balance in the ATM as well as the balance in the GLP as far as the ATM cash is concerned. So the difference would be the withdrawal of the cash either through the bank's own customer or through the other bank customer. So that particular difference has to be reconciled and we have to report that. So that is the first change in respect of cash. Now next thing is in respect of the currency chest branches. So currency chest branches, what is more important is that there are certain branches attached with the currency chest, that is the RBI transactions. So whenever there is a link branch which is attached to the currency chest, what is more important that there will be some cash transactions which would have been loaded to the currency chest. There are a lot of softwares available. We call it eKuber, or eKuber is a software which is being designed by the Reserve Bank of India to respond to all cash transactions which has been coming into the currency chest. Supposing your branch is attached to the currency chest, when you are going to deposit cash into the branch, what will happen is that the Kuber or the software will respond to that particular transaction. And what is being asked here is that if this particular transaction of cash remittances by the base branch to the chest is not properly responded by the RBI side, then it becomes a cash of the branch. It has to be recorded as the cash of the branch. And if you are already physically, the cash is already there in the chest, but the response from the RBI has not been received, this is very, very important. So what you have to do is that you will have to find out whether the last day, that is the 31st March withdrawal as well as deposit, or 30th March withdrawal as well as deposit into the currency chest has been properly addressed at the branch level or not. If it is not addressed properly, that has to be falling part as a reconciliation entry, and this reconciliation entry is a matter of fact to be addressed by the auditor, and it has to be reported wherever the inconsistency is there. Now the year-end balance, it is not actually now relevant because the money at call and short notice is not there at the branch. Now we will be moving on to the next amendment in the LFAR, that is the advance verification. If you look at the advance verification, we have to be very thorough and very clear about what is the requirement as per the new LFAR. The requirement of the new, as per the new LFAR, there is a slight change in the selection of advances. Earlier, up to last year, the selection of advances individually has to be made on the basis of the 2 crores or 5% of the advances of the branch, whichever is less. Now that is changed to 10% or 10% of the fund-based and non-based advances of the branch, or 10 crores, whichever is less. So when you go to the branch, the first duty what you have to do is that, or even before going to the branch, what you have to understand and what you have to find out is that which are all the accounts which is to be specifically verified by you. The specific methodology has to be verified. That is very important, because RBI requires, and as I told you, RBI insists that you have to report on those accounts which you have specifically verified. If you come through the slide, you will be able to get the idea about how the reporting aspect has been designed in the system itself. So in the LFAR itself, they have said that you have to report. If you are not reporting, it means that you have not verified. So the responsibility is pinned on the auditor. So the responsibility levels are already coming through the LFAR itself. You are committing yourself that I have verified this particular account. So that is inviting lot of responsibility onto the auditor when doing the branch audit. Now, in respect of those advances, how will you calculate this particular 10%? You will have to find out what is a fund-based advance, non-fund based. Supposing that your fund-based advance is 45 crores and non-fund based is 15 crores, your total fund-based plus non-fund based is 60 crores. 10% of that is 6 crores. So 6 crores is the benchmark. Any account where it is exceeding 6 crores, you will have to individually verify that particular account. And it is not required, or it is not sufficient that you just verify the account and just take all your evidences and close your file. It is not insisted. They say that you have to report on those accounts. The reporting on those accounts and how the the audit is to be conducted also is being specified in the LFAR. It says that you have to do a transaction audit. I again emphasize the word transaction audit. Transaction audit means each and every transaction of that particular account which has been selected or beyond the threshold has to be done by the auditor, and it has to be reported in the LFAR. And once you are going to do this transaction audit, I should very specifically say that identifying those accounts is the first task. Once you identify those accounts, the transaction audit has to be done by the senior chartered accountant himself. You will never be able to entrust the transaction audit verification or transaction verification to a lower level person. So this particular transaction audit, one of the some tips I have also made in respect of transaction audit, you will have to see the overall operations of the account. When you see the overall operations of the account, you should know the business process or the business profile of the client That means that we are being taught so far only about knowing what is the business model of the client. That is knowledge of the business of the client. But now when we are doing the bank audit, we are being asked to do further to know the business of the client. That means that supposing that you are verifying a contractor's account, you should know the business profile of the contractor. If you are going to verify a petrol pump account, you should know the business profile of the petrol pump. Like that, you should be having in mind, in the back of the mind, you should have the knowledge about what is the operational aspects and the operational reality of the business of the client or the client. Then only you will be able to go into the transaction audit and you will be able to report and comment on the transaction audit. Take the case of an example of a petrol pump. I usually say the petrol pump because the transaction in the petrol pump account has to ideally come as cash deposits, because your customers are going to give cash. 95% of the petrol pump will get cash as deposit. So your debit side of the account of that particular borrower should be cash deposit only. And on the contrary, if you look at the credit side, that is a payment side. What is more important is that he will be making bulk payments to SPCL or IOC or whatever it is, the supplier. So which means that your payments should be on bulk basis through RTGS or NEFT or your online mode. But you on the other side, on the contrary, on the debit side, you will have a lot of cash deposits. This is to be taken as a particular basis for the purpose of verification of the transaction of that particular account. On the contrary, if you are going to verify a contractor's account, in the case of the contractor's account, what is more important is that your receipt will be on bulk basis, whereas your payment will be on a piecemeal basis. Payment will be on cash basis, whereas receipt will be on online basis. So you have to verify the quantum of cash transactions versus your business or personal transactions. So you have to be very careful in analyzing the transaction in such a way that the audit is conducted in those specified accounts where the transaction is to be specifically verified, and you have to show and you have to comment on the inconsistencies of the transactions. Now coming to the check returns, if the 3 checks are returned for any particular period or more than 3 checks are returned, then immediately it has to be classified as a SMA 0 account. So the transaction audit, if you look at, if there is debit and credit of the same amount, it means that it has hit the particular clearing and transaction, and it has been debited and immediately it is credited, or it is credited and immediately debited, which means that there is a check return. If you go through the transaction analysis, you will be able to find out whether there is check returns or not. So the check returns is again going to be gauging the quality of the conduct of the account. So the quality of the conduct of the account is envisaged in transaction audit. Now coming to the operation at the brim of the limits. If you look at a particular account, if it every time it is operated at the brim of the limit, suppose the limit is 10 crores, and if it is always operated at 9.9 crores or it goes up to 10.5 crores and it is brought back, that is a very, very potential risky account. So this is an early warning signal that either the working capital requirement of the particular borrower is not being properly appraised by the branch, or the conduct of the account is not proper, or the planning of the borrower is not proper, so that it has got an incipient weakness of planning of the working capital or managing the working capital. So frequent overdrawings and the brim of the account is very, very important to be understood. And whenever you have found out those type of accounts, the transaction verification has to be specifically coming to the utilization of the funds which are being made out of the TODs. How come the TOD has coming into the picture? If the TODs are used for personal transactions, if the TODs are used for passing a check which is not connected to your business, then it is a matter of a regulatory concern, a control issue, which has to be reported by the auditor. Now again, your another bank frequently. Supposing that your bank account shows that the funds are always going to another bank. So now Reserve Bank of India has come out with a very blanket restriction that any person enjoying any limit with the bank should not hold a current account with any other bank. Which means that your entire operation should be routed only through this particular account. So the overall magnitude of the transaction of the account also has to be verified by the auditor, and it has to be reported specifically. Another point which has been coming into the fraud, Reserve Bank of India has very specifically reported that what is the symptom of a fraud? Round tripping. Round tripping is a symptom of a fraud. What is round tripping is that if a particular group has got 4 accounts, or if I have got 4 accounts in the same bank or different banks, I will be taking money from one account and depositing money in the second account, from the second account to the third account to the fourth account, and again it is coming back to the first account, which means that the same fund for a underlying transaction or without a transaction is moving around the banking sector, and everywhere it is evergreen. It is evergreen. Evergreening means that your limit is brought down by the particular credit of this particular account. So this particular amount is utilized for only evergreening purpose. And Reserve Bank of India, as per the IRAC norm also, says that evergreening is not permitted. Whenever there is a possibility of evergreening, whenever there is a probability of evergreening, it is a duty of the auditor to make a transaction audit of those accounts and report and comment on that particular account. Now, in the case of other accounts, you have to do a process verification. What is a process verification? Process verification is the overall conduct of the branch as a whole. Earlier, we were speaking about the conduct of the account of the borrower. Now, we are speaking about the conduct of the branch as a whole. The documentation standards which is being followed in the branch. What is the facility which is being offered by the branch? Whether the branch is totally focusing on the TODs, or whether the TODs are very liberally granted to the customers, whether the renewal is being properly done, whether the credit appraisals are properly being done, whether the inspection and the pre-sanction inspection as well as the post-sanction inspection is properly done. All these things are a matter of regulatory concern in respect of process verification. So you will have to go through the process verification, and you should also see how the system is managed, how the CBS is managed to see that the regulatory requirements as well as your control requirements are properly in order. Take the case of your masters. Master is going to be playing a very vital role in all your interest applications as well as other things. Even in the case of your asset classification, your master, which is called as a granular data, this granular data is going to be determining the total characteristics of the MIS data as well as other integrity of the informations which is coming from the computer. Supposing that if the initial holiday in the particular account is given in the master as 2 years instead of 2 months, what will happen is that for the 2 years the score will not take this particular account for the purpose of NPA classification at all, because your repayment is going to start only after 2 years. So if you take the sanction, you will find that the initial holiday is only 2 months. So this particular aspect has to be taken from the granular data. So you have to go through the granular data and finding out whether the process of the feeding of the master is properly done in a responsible manner by the branch, and whether there is any inconsistency in respect of feeding and making or updating the master. So now concentration of credits. Take the case of a branch where the entire credit is concentrated on 1 or 2 borrowers. It is risky. The proposition of that particular branch is going to be very risky, because your process is to be totally concentrating on these 2 accounts. If the conduct of these 2 accounts are going to be bad, the entire branch is going to be in trouble. So the overall perception of the branch as a whole has to be envisaged and evaluated by the branch auditor, and he has to report on the overall aspect. So this process verification is envisaged in respect of those accounts where you have not asked to specifically verify. That is your 10% of 10 crores. Now coming to the last thing, in the case of your COVID pandemic situation, the regulatory package has been declared by the finance minister. The Honorable Finance Minister has declared around 5 regulatory packages. That is package number 1, 2, 3, 4, and 5. Over a period of time, what is more important is that for the MSMEs, they have made regulatory package 1. Regulatory package 1 is that every person who is enjoying a working capital limit will be able to get a 20% of the limit as an ad hoc excess, which is to be repaid in 36 installments starting after 1 year, which means that for the first 12 months you do not have to pay. So the 24 months is the payment period which is starting only from the end of the first year. So this is the emergency, and the government is going to guarantee the additional finance which is going to be given. This is called the guaranteed emergency credit line, and it is called in different terminologies in different banks. So this particular guaranteed emergency credit line, even Kuntal Shah was saying that this is being either diverted by the borrowers, or it is used for the purpose of circumventing the NPA provision by regularizing a term loan account. This is very, very important. Supposing that you find that this particular loan is utilized for the purpose of regularization of a term loan account, which is otherwise out of order or which is otherwise past due, then it is a matter of regulatory concern, and then it's a matter of reporting. Because the IRAC norms very clearly says that you should never use a finance or a facility from the same bank or the same branch for the purpose of regularizing another potential NPA account. So that is very, very important. So whether it is an NPA account or whether it is a potential NPA account, any regulatory enhancement or any regulatory package which has enhanced the limits or which has funded the particular borrower with any extra limits should not be used for the purpose of that is only for the purpose of your working capital, and it should not be used for the purpose of regularization of the account. The bank may come out with a justification that yes, this is permitted because I have got a limit of 10 crores of rupees. There are every time there is a debate which is going on in the banking sector that I have got a limit of 10 crores rupees and I have got a term loan or which is have overdue by around 50 lakhs of rupees. I take this 50 lakhs from this 10 crores limit and I deposit it there. So 10 crores is already a sanctioned limit there. But when it is a fresh ad hoc limit sanction for the purpose of regularization, that fresh loan is going to be a process of evergreen. So here, this COVID emergency loan is a fresh loan which has come out of the pandemic. So this fresh loan cannot be utilized for the purpose of your regularization of the overdue term loan account. This is to be very carefully understood by the auditors when they do the branch audit. Now, this is going to be a biggest reach in respect of your LFAR reporting. LFAR reporting is, as I have told you earlier, casting lot of responsibility of the branch audit. The branch auditor's responsibility is taken by himself. He is taking a report by himself as to what is the responsibility level that he is assuming by himself. This particular point, this particular table is saying that which are all the accounts that you have examined. You have to be taken here. The account number has to be given. The account name has to be given. The fund-based balance of the fund-based limit has to be given. The non-fund-based limit has to be given. The year-end balance has to be given. And what is the total outstanding of the branch has to be given. And the percentage of your verification out of the total advance of the branch also has to be given. This gives a synopsis of the total verification process of what you have done in the branch audit as a whole. This is going to be taken as a testimony for the purpose of justifying whether branch audit is required or not. I am afraid whether this particular table, if it is going to be combined for the bank as a whole, will say that the branch auditors with 2,500 branches has only covered around 38% of the advances, or all they have covered only 25% of the advances. So why should we have this particular spread? Maybe one of the things. Second thing is that you are asked to verify individually the accounts which are going about the threshold benchmark, and if you have not verified that you are going to be responsible here because you are not including it in this table. Now, if you are going to include it in this table, it means that you have taken responsibility of verification. So there are multi-dimensional aspect into this particular table. One is that you are assuming responsibility of having verified. Two is that the overall verification process for the bank as a whole can be determined from this particular table. Three is that if you are not including in this, it means that you have not verified and you have not done due diligence in respect of the branch. So three aspects are there which is coming from this particular table itself. Earlier, it was not a table format, or you were not asked to give specific account verification details. Now, the Reserve Bank of India is coming out with the auditor to give the specific account verification. Time is not far that Reserve Bank of India during the AFI, that is annual financial inspection, may ask a specific question to the branch auditor. Out of this particular table, you say that you have verified this particular account. This particular account is now having an incipient weakness, or it has become a fraud, or it has become an NPA. Why did not you look at that particular point of time when you have audited? And you have to justify with the working papers. You have to justify with the evidences. As told by Jomon sir very correctly, they will be asking for the audit evidence and the audit documents first. Now you are committing yourself in the LFAR that you have verified this particular account. So this is going to be a very, very responsible task for the auditor. So now, if you look at every learned speaker, every seniors are saying that LFAR, if you read it for one time, you will understand the LFAR. If you read it for 2 times, you will be better understanding how to go about the LFAR. If you read it 3 times, you will be doing justice to the worker. If you read it 4 times, you will not do the branch. So that is this. I'm not scaring you. I'm only telling that the responsibility levels are being axed. I will say that everywhere, if you go further to the slides, there are modifications which have been brought in to the LFAR, which says that the auditor is assuming and auditor is committing himself, and auditor is reporting himself that I have verified, and you are committing yourself that you have verified. Now the next point is regarding the quick mortality accounts. Quick mortality accounts, earlier they were only asking a peripheral question about the quick mortality. Now they have very clearly asked what is the quick mortality account. Have you come across any quick mortality account? If you have come across such quick mortality account, you have to give the account name and the account number and the balance at the end. What do you mean by quick mortality account? Any account, any loan which is sanctioned, and if it becomes an NPA within a period of 1 year, is invariably called as a quick mortality account. So any account which is NPA within a period of 1 year of its sanction is a quick mortality account. And there are other cases also which will be called as a quick mortality account, where if you are sanctioning a particular loan on December, and from December onwards, as on the date of 31st March, you find that there is no transaction in the account. And if you find that there is incipient risk involved in the particular account of a fraud, if you smell that there is some fraud in the particular account, you have to immediately report that particular account as a quick mortality account, because although it is not finding a place as an NPA because it has not crossed 90 days, it is a quick mortality account because you will have to gauge the documents, you will have to gauge the credit appraisal, you will have to gauge the sanction, and if it is going to be a risk-prone account where there is a potential threat of delinquency or a potential threat of a fraud, I would request you to please take it as a quick mortality account and you will have to report it separately. Now again, you are assuming responsibility of reporting the quick mortality account. Individually, you are reporting the account name, account number, and balance at the year. Take the case again, as we have discussed earlier. If you have not reported a quick mortality account, what will happen? The AFI or the Reserve Bank of India will ask you, why did not you report at that point of time when you have made the audit at the year end? Branch statutory auditor, why it was not reported? And if it is reported, you have to find the reasons why it is reported. So two things are there. So if you are going to report, you will have to have the reasoning for the report. And if it is reasoning, the reasoning has to be backed by the audit evidences and the documents. And again, I go back to what Joman sir has said. The evidences and the documentation in respect of whatever you are reporting has to be in your file, properly filed and properly documented in such a way that at any point of time you are able to protect, you are able to protect yourself, or you are able to protect the fraternity of the chartered accountants itself in respect of the branch audit. Now, this is a very important point. What is asked by the Reserve Bank of India and the LFAR is that the interest rate is correctly fed into the system. As I have already asked, Kuntal Shah also already told, the interest rate has to be fed into the system. The interest rate is going to create a lot of havoc in respect of the CBS interface with the branch master. So CBS is the application software which is run from the software at the CBS end, and it will interface with the master data and the interest is applied. So whenever master data is going to CBS is going to interface with the master data and the interest is applied, if the master data is wrong, what will happen is that the interest application will be wrong. So the basic data which is more important at the branch level to be verified is the master. So what I suggest is that in respect of those accounts where you have to verify specifically, and in respect of other accounts also, please select the sanction. Please select those accounts and take the sanction, and we see whether the feeding of that interest rate is properly done in the account. If you find there is any inconsistency, it is a matter of fact to be reported in the LFAR. Now again, the next question what is happening is that whether the MCLR, almost every account interest rate is pegged to MCLR. MCLR means it is a floating rate of interest, which means that MCLR plus 2%. The plus 2% is the spread, and MCLR is the basic rate which is decided as per the asset liability management of the bank as a whole. So asset liability management of the bank as a whole will decide what is the MCLR. So that is a figure which you have a volatility. Whereas in the case of your spread, it will be a static account. If the spread and the MCLR is not given properly, it means that it is a fixed rate loan. So you have to find out whether it is a fixed rate loan or a floating rate loan. If it is a floating rate loan, it has to be pegged to the MCLR. If it is not pegged to the MCLR in the master, then what will happen is that automatically the CBS will be applying interest on a fixed rate basis. So there can be differences in the case of the interest rate, and the deficiencies or the discrepancies which has been found at the end of the day from the CBS level is of huge magnitude. We have identified interest leakages to the extent of around 420 to 25 crores in a bank only on a single month interest, which means that the interest rate were not properly applied at the branch level, or it is not properly fed in the master at the branch level. So now renewal and review. What is being done at the branch level is that the accounts are supposed to get renewed on an yearly basis. In the case of a CC account, in the case of an OD account, the account has to get renewed on an yearly basis. Year on year, this particular account has to be renewed. What Reserve Bank of India comes to say is that if the renewal is being resorted by a short review or by a limited review or by an ad hoc review, then it is a matter of regulatory concern. So what will happen at the branch level is that the due date of the renewal will be 30th September. But what they will do is that with the available documents, with the available financials, they will do a limited review, or they will call as a short review, or they will call as an ad hoc review. These three things are being done for the purpose of circumventing the due dates of renewal, and they will be putting on record that this particular account is limited reviewed, and you can extend the particular operational sanction of the particular account as a going concern for further more period. And when you obtain all the documents, you will be making a comprehensive review or renewal. So here it is a matter is being very seriously taken by the Reserve Bank of India. The frequent renewal and frequent short review or frequent short-term review, which is going to be happening on a regular basis, is going to have an impairment of the total delinquency of the account itself. So the delinquency of the account is going to happen because you are not reviewing it properly. So what they have told is that if you come across cases of frequent rollover of the short-term loans, which is limited review or ad hoc review or a short review, that has to be reported here. Now the practical scenario is that the review has to be done by the sanctioning authority who has sanctioned the original loan. Supposing if the sanctioning authority is the branch, the review has to be done by the branch. And if the sanctioning authority is the regional office have to do the review. If it is a head office have to do. If it is a board has to do. So what happens is that the branch would have sent all the papers to the head office or the controlling authority, but the renewal papers would not have reached the branch till the time your audit is over. It is not your concern. It is only an internal aspect, internal arrangement of the branch that you have not received the documents. So you have to be very strict because this particular LFAR for 2020-21 is an acid test for the profession. I will tell that this is an acid test for the profession because they are pinning the responsibility on the auditor. They are dragging the auditors to take responsibility of the accounts verified, and they are also asking specific questions in respect of whether you are verified or not. If you are verified, what is the comment of yours in respect of your verification, and what is the adversities that you have found out, and they are also asking you to be very clear about how your decisions are to be taken. You cannot be taking a qualitative decision. You have to take a discrete decision as per the IRAC norm as well as per the RBI guidelines. You will never be, or you cannot, or you should never relent to the pressures of the branch or giving any wide or vague justification in respect of this renewal review. For any matter, for anything for that matter, you should not take any vague explanations. You have to take crystal clear explanations, and if you are not satisfied, your judgment has to be exercised and you will have to report. You will have to be steadfast. And if the renewal is not coming from the head office, you can get a letter from the head office that this has not been coming. If it is not coming, I would say at the branch level, you have to report it in the LFAR that the renewal has not taken place. Very clear. The renewal is not taking place. You have to strictly adhere to the restrictions and regulations which is being put here. Now correct to the credit rating. What is required is that the credit rating has to be obtained. Point number 1. Point number 2 is that the credit rating has to be updated into the system. Point number 3 is that going further, you should also see whether there is any deterioration in the credit rating. So deterioration in the credit rating is that earlier your credit rating was A++ or AAA+. This time if it is only BP+, which means that your credit rating has deteriorated. Although there is no risk in respect of the total credit portfolio of the branch, you should be able to identify whether there is any deterioration in the latest rating compared to the earlier rating. If there is any deterioration, that is a matter of control issue, that is a matter of incipient weakness, that is a matter of potential threat, that is a matter to be reported in the LFAR. So what I would request is that you should not confine yourself to see whether the credit rating has been taken by the branch or whether the credit rating is updated into the system. More than updation of credit rating and more than taking the credit rating, you should also see whether there is a credit rating updated within a period of at least 1 year. Every year the credit rating has to be updated. If it is pending for more than 2 years, it is a matter of reporting. And if the credit rating is not updated into the system and the master, it is a matter of reporting. And if there is a deterioration in the credit rating from the previous credit rating, then it is a matter of regulatory concern and reporting. So what I would request all the members is that you should be very clearly approaching the branch audit this time to see that all these questions are specifically answered. Earlier speaker has also told that yes, no, not applicable is no more there. It is not applicable in the audit. So I would say that yes, no, not applicable is not applicable in the audit at all. So we have to be very careful in very specifically giving the audit report and LFAR in such a manner that there is no room for anybody to complain tomorrow that it is only a vague report which cannot be pinned or which cannot be pointed out in respect of the incipient weakness of the branch. Now the other point which has been added in the LFAR is regarding the buyback of shares. The buyback of shares is coming, I would say that it comes only in the corporate parlance. But for the purpose of understanding, what I would say is that you find out if you want to know what is the buyback of shares, you have to see what is the subscribed capital base of the company. Subscribed capital base of the company for the previous year, previous audited year and this year. if the subsidized capital base of the company remains the same and the promoter share has increased, there is a possibility of buyback. So what you have to do is that the buyback has to be, what is asked in the LFAR is that whether the bank has provided loan for the purpose of buyback of its shares or securities. So the question has to be answered, or we have to identify those corporate entities where the promoter's contribution or the promoter's share has increased without increase in the subscribed capital. If those cases are there, there is a possibility of buyback, and you will have to analyze whether the timing of the buyback and the timing of the buyback has to be aligned with the any finance which is given by the bank in respect of buyback of the shares. Now the next point is the lien marking. Lien marking is added. In respect of lien marking, what is added is that you will have to ensure that the lien marking is done in respect of the related accounts. So now you all know that the bank has got a general lien. It is not a specific lien, it is a general lien which is applicable to the bank. This means that whenever a deposit loan is taken, when a deposit loan is taken, you have to have a lien marked in that particular deposit. Time and again, what is found out is that when the deposit loan is closed, the deposit is given back to the customer because the lien is marked only onto the deposit loan. Now, what is being asked in the reserve LFAR is that you have to see that the deposit is released to the customer only to after seeing that the related accounts are properly being conducted by the borrower. Supposing that I have got a fixed deposit of 1 crore rupees and I have also got an OD account or a term loan account which is having an incipient weakness. In that particular case, you are not supposed to, or you have to mark a lien on the related accounts also into that particular deposit so that the bank is having more grip on the recovery part, or the bank is having more security on the recovery part. So what is required is that the flagging of that particular lien marking has to be extended not only to the deposit loan but also to the related accounts. Only if the bank is satisfied that the related accounts are accurately in order and the related accounts are perfectly in order, he can take a chance of doing the release of the TDR. Otherwise, the TDR should not be released because it should also be marked lien with the related accounts. That is what is expected out of this particular thing. So what you have to see is that you will have to find out which are all the deposit loan accounts, and if the deposit loan account is there, you will have to see whether the deposit loan account relates to any borrower. If the borrower, if the lien marking is done only on the deposit loan, it should not be sufficient, and it has to be marked on the related accounts also. Related accounts means is CC account, is OD account, is term loan account, or whatever it is. Now, what is the shortcoming in respect of your review renewal? Shortcoming in respect of the review renewal, I have already told you. Whether short review is being resorted to as a tool for evergreening the account or extending the date of renewal. As per the IRAC norms, if the renewal is not taking place within a period of 6 months, it should be classified as NPA. The moment you go to the branch, you get a report from all the CBS platform. What is the due dates of renewal? Every account, the due date diary is there, and the report is generated from the system as to what is the due date of renewal. So the renewal accounts which are due for renewal from the date along with the date of renewal, due date of renewal will be a report available in the CBS system. You will have to draw that particular report and find out which are all more than 6 months pending. And when it is more than 6 months pending, the branch will come out with a justification that it is short reviewed. It is extension of time is sanctioned, or your ad hoc review is done, or your limited review is done, or the papers are sent to the controlling office and we are expecting the renewal at any point of time. These type of your rolling over of the particular account on the mice of your renewal and review is not permitted. Is not permitted. If you find that it is not renewed for more than 6 months, you classify it as an NPA. It has to be classified as an NPA, and your limited review or short review or your what you call the head office is going to sanction the review is not a justification for you not to classify this account as an NPA. So what I suggest is that you have to be steadfast in respect of taking the accounts which are overdue for renewal for more than 6 months. Now coming to the COVID situation. In the COVID situation, they will say that we have not obtained the balance sheet. We have your regulatory package has not given any leeway for the purpose of the COVID package for the submission of the documents. Submission of the documents is totally different from your conduct of the account. You may have trust in the working capital management. You may have trust in the funding, but you may not have any trust in the submission of the documents. So that is what is very important. Even if you go for the audit, your 20 audit is already over and your filing of the income tax return is over, and every borrower has to or should have finalized his balance sheet, and not getting this particular balance sheet is not an excuse for the purpose of this. Now here, what is required in the LFAR is that you have to specifically report. You have to report the accounts which are overdue for renewal from 3 months to 6 months and over 6 months. So you have to make a specific report about how many accounts are there, and if you want to have an annexure to be appended to the LFAR, you have to append an annexure to the LFAR that these are all the accounts which is set for renewal for more than 6 months as well as more than 1 year. Now the pertinent question comes in respect of DP. The drawing power, a very important aspect. Earlier, this was a passing question which is asked whether the drawing power is properly fed into the system or computed properly. So what you have to do is that you will have to see the logistics, or you will have to see the logic of computation of the drawing power. The drawing power is nothing but, in the case of a CC account or an OD account, the primary security has to be reckoned, and on the basis of the primary security, you will have to update the drawing power. Supposing that I have got a loan of 10 crore of rupees, and my stock is only 7 crore of rupees, and my DP is only 6 crore of rupees, I have a drawing power of only 6 crores of rupees. Irrespective of the fact whether I have got a limit of 10 crores, I am allowed to draw only up to 6 crores. So if you go back to the IRAC norms, it says that the sanctioned limit or DP whichever is less. So the DP has to be updated on a dynamic basis, on a monthly basis, as per the stock statement submitted by the borrower. So now the stock statement, if it is not submitted for more than 3 months, it is very specifically stated in the IRAC norms that if the stock statement is not submitted for more than 3 months, you cannot take any value for the stock. You cannot take the value of the stock prior to 3 months. That is not possible. So submission of the stock statement has got a direct bearing on the drawing power. So the calculation of the drawing power is very important, and you have to feed the drawing power into the system. On a monthly basis, the drawing power has to be computed and fed into the system. So whether the feeding into the system is properly happening or not. So this particular aspect has been very clearly asked in the LFAR, whether the feeding of this particular drawing power is made into the system, and whether it is computed properly. Now comes to the case of your multiple banking arrangement as well as the consortium. Kuntal Shah has told that in the case of security, where 100 crore security is there, and your share of that particular account is 10%, for your IRAC norms, for your asset classification, you can take only 10% of the total security, because you are having a share of only 10%, your lien is only 10%. Same analogy happens here also in the case of your DP calculation. Supposing that the particular borrower has got around 5 banks as under multiple banking or consortium, and if his total stock for that particular month, he will submit one stock statement to the lead bank, that is 100 crores, and your share is only 10%, and if the DP calculated is 75 crores, your share of the DP is only 7.5 crores. So the share of the DP only has to be taken for your consideration, and the share of the DP only has to be computed for your purposes to see whether bank independent, whether this particular account is conducted properly or not. Which means that if at all it is a consortium account, or if at all it is a multiple banking account, the IRAC norms has to be applied on a bank independent basis. That means that my bank, what is my share of the total DP, how it is conducted in my bank. If at all the other bank is classifying it as NPA or a performing asset, it is not the concern for you. You will have to take into cognizance how the account is conducted in your bank. Only according to what is the conduct of your account as per the IRAC norms and the efficiency of the conduct of the account, you will have to take a decision about how it is to be taken. Now, in the case of calculation of the DP, you also have to take into cognizance the obsolete stock, the non-moving stock, the non-saleable stock, and again, in the case of your COVID pandemic, if you find that there are perishable stocks or stocks which are obsolete, there are a lot of business models which has been collapsed because of the COVID. So if there is a stock of those items which are not saleable at all, you will have to consider whether that particular DP is to be considered in the sanctity or not. The sanctity of the DP also has to be considered in the COVID parlance. So post-COVID, you will have to see whether the stock will be there. Stock will be there, but the stock is not saleable because after the pandemic, the business itself is totally gone. There are a lot of businesses which is totally in haywire. You don't have sales at all. So in that particular situation, you will have to see how far you will be able to take into cognizance the drawing power on the strength of the stock statement which is submitted. If there is any potential threat or incipient weakness in respect of arriving at the drawing power, I would request you to please report that in the LFAR. Now coming to the audited financial statements. Now here the audited financial statements have to be obtained. It is a policy of the bank. It is a call on the bank whether the audited financial statements have been obtained or not. If the audited financial statements are not obtained, and if it is a matter of incipient weakness that they are going to make the short review again and again, and if they are not making the audited statement for the purpose of your renewal and review, then it is a process issue. Earlier we have seen that the process has to be verified. The branch process of conduct of the branch has to be verified. In that particular case, you have to see whether the process of the particular branch is in such a way that audited financial statements are not obtained. They are only renewing and reviewing the account on the basis of the estimate given by the borrower, not on the strength of the audited financial statement. That is a matter of concern to be addressed here. Now coming to the stock audit. We all know that above a benchmark, every bank has got a system of conducting the stock audit. So now what will happen is that the stock audit would have been appointed. It will be another chartered accountant, and the stock audit, they will say that it is already appointed, but the report has not been received. This is the ready-made answer which is coming from every branch at the time of when we are verifying the account. Sorry. So the stock audit report has to be obtained, and you should also see whether the observations, adverse comments in the stock audit reports have been properly addressed by the branch or not. So we have to be very careful in identifying the stock audit. We have to see whether the stock audit report has been received on time or not. Time and again, what is the matter is that the stock audit would have been appointed. The stock audit report would not have been received by the branch, or the stock audit report would not have seen the light of the branch. What you have to see is that whether the stock audit is due or not. Point number one. Second is that whether the stock auditor is appointed or not. 3 is that whether the stock auditor has submitted the report or not. 4 is that the stock audit report has come to the branch or not. Sometimes the stock audit will be appointed by the inspection department, and the report also will go to the inspection department. It would not have seen the light of the branch. So you should to see the adverse comments in the stock audit report and how it is being addressed by the branch. So the stock audit report is going to be very, very important. You have to take the latest stock audit report and see that whether it is the adverse comments are properly addressed by the branch or not. Now, the auditor statements again. The limit of obtaining the auditor statements, earlier it was 10 lakhs of rupees for non-corporate entities. Now LFAR has removed that particular limit. It says that it is bank independent. The bank can decide. The policy of the bank has to decide what is the auditor statements to be obtained. Now here, one more question has been added in the LFAR, stating that whether there is any substantial deterioration in the value of the security. Now, there is a very specific question in the IRAC norms that if there is a deterioration in the value of the security for more than 50%, then the account need not be classified, or it need not pass through the ladder of substandard, doubtful and loss asset. It can be directly downgraded. So in the case of accounts where the deterioration in the value of the security is more than 50%, it has to be directly classified as a doubtful asset, and it need not pass through the substandard asset DA1, DA2, DA3. It can be directly even downgraded as a D3 account. So if the deterioration in the value of the security is more than 90%, then it has to be directly downgraded as a loss asset. That is the IRAC norms. But I will not say that you should go by the IRAC norms where it is very discrete in respect of the classification. Here what is asked is substantial deterioration in the value of the security during the financial year in compared to the earlier period. That is to be reported here, which means that even 40% deterioration in the value of the security, if you feel that as a matter of judgment, as an auditor, if you feel that this is a substantial deterioration in the value of the security, that is to be reported here. Leave alone your IRAC norms. So IRAC norms is very discrete, but that is only for the purpose of asset classification. Here they have asked for the reporting by the auditor in respect of substantial deterioration in the value of the security. If the stocks deterioration in the value of the security, if the stocks, I mean qualitatively, if the stock statement does not give a stock statement, or the value of the security has deteriorated further, or if it is 45%, or if it is 25%, which may not be attracting the discrete provisions of the IRAC norms, you have to report it here. and you will have to make the erosion in the value of the security in this particular LFAR. Now coming to the red flagged accounts. See, red flagged accounts are those accounts where the bank has made a early warning signal. We have got lot of ways in which the bank will be identifying an early warning or an incipient weakness in the account. We have got the red flag account. We have got the early warning signal account. We have got the potential NP account. We have got the irregular account. We have got the health code. We have got the SMA 0, SMA 1 and SMA 2. All these things are only pointing at the futuristic potential threat on this particular account or the incipient weakness of the account, the stagnancy of the account, the stickness of the account. So these type of things have to be gauged as a judge. You have to make a judgment whether the branch has got a policy of flagging the account as a risky account or not. Let it be a red flag. Red flag is not that it should be a red flag. The bank may have a different policy. They may take it as EWS or it is the early warning signal, etc. So what is any deviation? What they say is that whether the policy of the bank has to be aligned with the flagging of the particular account. There is a case where the account is having all the incipient weakness, but it will not be finding a place in the SMA 0 or SMA 1 because they would have deflagged or they would not have red flag. So what is more important is that the flagging of the particular account, wherever there is an incipient weakness is found, has to be made by the branch. If it is not done, that has to be reported here. Now, the other point, which is very, very important from the LFAR point of view, you cannot escape. Auditor is not able to escape from commenting on the adverse features considered significant in top 5 large advance accounts. That is standard accounts. Very, very important. So here the LFAR requires that you have to comment. If at all there is no adverse features, you have to say that there is no adverse features because it is considered significant, has to be reported. If you are not reporting, you are failing in the reporting. So here it is not necessary that it should be an NPA. It is not necessary that it may find a place in your 10% category. So what is more important is that you are asked to comment on 5 accounts. Meticulously comment on the 5 accounts, which is a standard account. So leave alone the NP account. Leave alone the other accounts which is classified for the transaction verification. You have to take 5 large accounts, which is standard account, and you have to make the adverse features or you have to identify the adverse features which are significant. So this is requiring the auditor to commit himself as to what is the adverse features. Take the case that you are not reporting the 5 large standard accounts. It is a failure on the part of you to do the due diligence in respect of the audit. If you do that, you have to see whether all the adverse features are commented in that particular thing or not. And if you say that there is no adverse feature significant for the purpose of commenting, then you are taking responsibility of the account. So here it is a double-edged sword. If you report, you are taking the responsibility. If you are not reporting, it will question your due diligence. So you have to make a report. So this LFAR is going to be, I would say that once the LFAR is totally completed, and if you are going to skip any of the questions of the LFAR, you are drawing on the coffin of the auditor itself. So it is a very, very risky proposition where you have to have a responsibility assumed by yourself, and you are cast upon taking the responsibility, and you are cast upon giving the report also, instructed to give the report also. I think, Jalapati sir, can we go for another 10 minutes?
You can go, sir. You can go.
Yeah. So what is asked is that the adverse features have to be reported. So the LFAR now is going to be very, very scary. If the LFAR reporting is not being properly done by the auditor, it is going to be on the either side. Now, when Jomon sir is going to take up next year that sir, you should not increase the level of audit from 20 crores to 25 crores to the RBI or the finance minister, they will immediately show the LFAR. They will immediately show the consolidation of the LFAR. This is a figure in front of me. Why, Jomon, you are saying like this? So when they are fighting for the institute and the brother and the profession on one side, they should also have the cushion. They should also have the comfort level of the figures within them. So that is going to be very important. So what is required in the LFAR is that you have to comment on the file articles. Now the manual intervention in respect of drawing the asset classification. As already told by Kuntal Shah, it has been mandated by the Reserve Bank of India that from 30th June 21st, that is June 30th, 2021. the bank should not have any manual intervention in respect of drawing the asset classification statement, and it should be made as an ongoing basis as a day-end process. But the ideal situation may not come because so many things are even now manually fed. Take the case of your drawing power, take the case of your asset value, take the case of your security value. All these things are manually fed even today. Take the case of a depreciable asset, plant and machinery. If the security is plant and machinery, you have to give depreciation leverage for the purpose of valuation of the security. So that is to be fed manually only. So you are not reaching an idealistic platform of generating the software, generating the systems of system generated IRAC norms or the asset classification. But as far as possible, manual intervention should not be there. How will you identify the manual intervention? I have seen a question in the last session that how will you identify the manual intervention? Very simple. You have got a lot of methodology of identifying the manual intervention. One is through the system itself, you will be able to identify. There is a report which will ask for the authorization of manual intervention in the master or authorization in the manual intervention in the flagging. There is a report available in the CBS. If authorization has not been given in respect of manual intervention or modification of the commands in the system, there is a report available. That is authorization report is there. Whenever the authorization is given by the TBA, that is the our administrator, that is a report which is generated. That is an exception report. That is one way of looking at it. Other simple way of looking at it is you take the NPS statement as on 31st January last quarter or 31st December last quarter. You take the NPS statement as on 1st of March. You take the NPS statement as on 25th of March. Take the NPS statement as on 31st of March. The 4 NPS statements, if you take, if you have seen that any account is missing from the particular NPS statements, if it is upgraded or downgraded, that means that the account has to be verified in depth. Take the account copy, find out whether there is any improvement in the conduct of the account. If the improvement is not there and still it is not finding a place in the later NPS statement, there is a manual intervention. So you will be able to do an audit both ways. One is a benchmark audit where you are taking the output. Your output can be taken as your manifesto for the purpose of taking whether there is any manual intervention. So if the NPA is not appearing as an NPA in the second statement than in the first statement, then that account has to have some recovery. If the recovery is not happening, it is a manual intervention only. So you can ask for the branch manager how it does now come out of the NPA, whether the account is recovered or whether the account has not been regularized. There is no regularization, and if there is no incipient weakness is continued, and if it is not finding a place in the second report, naturally there has to be a manual intervention. Take the case of your SMA1, SMA2, SMA3, SMA0. Natural migration has to happen in SMA. SMA0 is 0 to 31 days. SMA1 is 30 to 61 days. 31 to 60 days. SMA2 is 61 to 90 days. Supposing that an account is going to be in SMA0, it has to get naturally migrated to SMA1 after 31 days. It has to get naturally migrated to SMA2 after 60 days. So it has to happen eventually. If the recovery of the account is not happening, or the regularization of the account is not happening, or the recovery is not properly happening, or the account is upgraded, or the account is not properly conducted within the period of 0 to 90 days, the natural migration is to happen. And if the natural migration is not happening, it may be either of the reason that the account is regularized or there is a manual intervention. So there are only two possibilities. Either the account is regularized or manual intervention is there. So there are a lot of ways in which you will be able to identify. What is asked is the LFAR. What they have asked is that whether the branch is following the system of classifying SMA0. Invariably, every branch is following. You will have to see whether the record of this particular thing is there. Here again, another point which is axing the auditor. Axing the auditor, I will say, it does not end. It does not end in specific reporting. The LFAR has asked the auditor to commend with the reasoning on the upgradation of an account which is more than 10 crores, on the downgradation of an account within more than 10 crores. See the way in which it is crafted. I think a chartered accountant brain is there before the LFAR modification also. I don't know whether ICA is involved. So what I am saying is that they are pinning the responsibility, stating that you cannot escape the responsibility if there is an account. So how will you be able to find out? You have to go to the statement which you are signing. At the time when you are doing the branch audit, there is an NPA movement certificate you are giving. NPA movement statement you are giving, you are signing. So in the NPA movement, you will find what is the opening balance of the NPA as on 1st April. What is the accounts which is coming into the NPA with number of accounts as well as the amount. And what is the account which is recovered or upgraded. And what is the total NPA at the end of the year with number of accounts as well as the amount. And you have to collect the accounts which are upgraded as well as which are downgraded. That is available in the asset classification also. In the case of upgraded accounts, you will have to take it from the NPA movement and you will have to take the number of accounts which is upgraded. And if it is more than 10 crores, you will have to go back to find out whether the upgradation is proper as per the Reserve Bank guidelines or not. If it is downgraded, you have to see whether both ways. Both upgradation and downgradation and in excess of 10 crores, with outstanding in excess of 10 crores, you have to have your opinion. Your commending has to be there on those accounts with reasoning. Why you are saying that? So that is very, very important. So again, it is a very important point to be noted in respect of your LFAR. Now your income recognition and provisioning. Whether the RBI guidelines have been properly followed or not. What will happen in respect of your restructured accounts? What will happen in respect of your regulatory package 2? Where it is said that the bankers are given a privilege. Take the case of your pandemic. That is from February 1st March to 31st August is the pandemic period. The pandemic period starts from 28th February or 1st March and it ends in 31st August. So that 6 months is a period. So there is a case with the Supreme Court of India, which all of us know, that the moratorium period, the interest should not be charged. That is one case. Another case is that interest on interest should not be charged. There are two cases. One is that when the bank is charging interest on a monthly rest, on the second month, you are paying interest on the interest on the second month. On the third month, you are again paying interest on the first month and the second month. Likewise, for the 6 months, there is a compound interest component in the during the moratorium period. So it is affecting the sanctity of the moratorium. That was a question asked in the Supreme Court. So what Supreme Court said is that you will have to take a decision. It has been given to the bankers. The government also was to take a decision. And now ultimately it is found that we will waive the interest on interest. That is the compounding factor will be waived. So what the bankers have been given by the regulatory package is that you can draw this particular interest portion during the moratorium period as a separate funded interest term loan. FITL can be created and the FITL will be repayable according to the restructuring norms of the fixed by the bank. According to the policy of the bank, you can create an FITL, that is your funded interest term loan. So this term loan is going to be another term loan which is sanctioned, which consists of only the simple interest charged during the moratorium period. So the moratorium period interest will be coming as an FITL. And this FITL is only the interest portion. Since it is only the interest portion, if it is not going to be recovered, or if it is an interest portion, you have to see whether the recognition of that interest is to be done or not. Very important. If it is a performing account, you can recognize the interest. If it is a non-performing account, you cannot recognize the interest. So what is asked is that in the case of creating an FITL, you will have to create a back-to-back suspense account. You cannot credit this, you have to debit the profit and loss account with a back-to-back provision. So these are all the package intricacies within the regulatory package itself. So the income recognition norm has to be aligned with the knowledge and wisdom of your regulatory packages. And if the regulatory package is permitting you, and if the account is going to be again non-performing asset, you will have to be very careful. Now comes the case of your Supreme Court verdict. Again, Supreme Court has given a verdict on 3rd September, stating that any account which has not been classified as an NPA as on 31st August 2020 cannot be classified as an NPA anymore. Still further orders of the Supreme Court. So it has been explained how it has been happening in our channel, our ICI channel. The Supreme Court has given only 2-line judgment, stating that an account which has not been classified as an NPA up to 31st August cannot be classified as an NPA till further orders from the Supreme Court. Simple, 2-line. This has got a very high ramification in the audit as of 2021. Because The bankers have taken a total different stance. What the bankers have taken a stance is that if you look at the quarterly review made for the month of September as well as December, September 30 as well as December, 2 quarterly reviews are already over. What the bank has stated is that there are certain cases the Honorable Supreme Court has struck the circular itself. There was a February 12 circular in respect of certain IBC norms, which has been totally struck as invalid by the Supreme Court. Here, the IRAC norm circular has not been struck down by the Supreme Court of India. What they say is that your classification has to be stalled. So, what the bankers have taken is that they have taken a leeway in between. What is the leeway is that I will be going according to the IRAC norms, making all the provisions according to the IRAC norms, and I will not classify it as an NPA and declare it as an NPA. So, your declaration of the account, it will not go to the CIBIL, it will not go to your credit score, it will not be affecting your impairment in respect of the conduct of the account or all regulatory requirements. But for my prudence, I will be making all classification and all provision as per the IRAC. And this is separately disclosed as a note in the balance sheet. So that is why going to happen. So what you have to see is that we will have to get the policy. I think Joman sir, I have taken it up with our PDC committee chairman Babu sir also, that the central statutory auditors have to communicate with the branch auditors in respect of the policy taken by the particular bank. What is the policy taken by the bank in respect of the Supreme Court judgment which has come on September 3rd? So the policy of the bank is going to play a vital role. Supposing if the policy is not aware, yes, Jaman. It's not audible. It's not audible.
Government sir, not audible, sir.
Yeah.
So I was thinking that should be the closing circular,
No, that is what. See, closing circular will be invariably included only with the closing instructions. How to close the account and how all these things are there. But the policy of the bank in respect of in the wake of this particular Supreme Court judgment is a matter of fact to be known to the branch auditor, because what happens is that the branch auditor may be practically facing lot of difficulty. The branch manager may be very clever manager. He will not classify an account as NPA and he will show the Supreme Court judgment to the branch auditor. He will not have any say because he will be between the devil and the deep waters, whether he has to follow the IRAC norms or the branch Supreme Court judgment. So there, I have already requested Babu sir. I have already requested Babu sir and he said that he will address to it. So what I am suggesting is that okay. So now what is important is that the income recognition in respect of those accounts as per the regulatory package. Now time comes in the case of restructure and rephased accounts, whether it is reported to the controlling authority. Again, coming back to the package, that is a regulatory package. What the regulatory package has told is that during the pandemic period, the bank is free to analyze the working capital cycle of the borrower, and according to the requirement of the borrower, he is able to restructure or rephase the account. Restructuring and rephasing can be in the form of extension of your credit limit, or rephasing can be in the form of extension of your repayment period. Rephasing can be in the form of reduction of the EMI. Repayment can be in the form of creating an FITL on the moratorium period. All these things are forming part of your restructuring or rephasement. So any initial sanction terms which is relaxed for the purpose of your conduct of the account, which may circumvent the provisions of the IRAC norms, is considered as a restructuring or rephasement. So in this particular case, the reporting of the restructured accounts, very simple, that we are signing a certificate in respect of the restructured accounts. You have to see whether all these restructured accounts are properly reported to the higher authorities or not. So refacement and restructuring includes everything. Any EMI reduction, any extension in the loan period, repayment period, Any enhancement in the facility or any reduction in the interest loan or funded in the creation of the funded interest term loan is considered as a restructuring. And as per the RBI circular I have noted here, it states that the restructuring has to be reported to the controlling authority. If it is done only at the branch level and not reported to the controlling authority and got certified by you, it is a matter of regulatory concern. That is what is required here. It says that not that you are signing the restructured account details at the branch level, you should also ensure that it is reported at the higher level. If it is not reported at the higher level, it is a matter of concern to the LFAR. So now restructuring has been done as per the RBI guidelines. Yes. Any restructuring, you have to identify the stress. That is all regulatory package 2, 4, and 3 are in respect of your identification of the stress in the account. What is the stress faced by the borrower is to be identified in the bank, and you have to give the medicine according to the requirement. You cannot give a medicine for low pressure for high blood pressure. If it is over trading, you have to give medicine of reduction of your limits. If it is under trading, you have to give more finance to him. So you cannot have medicine for low pressure for high blood pressure. So that is very important. So what they say is that you will have to identify those things and report it properly. Now the upgradation of the account is proper, and if any disagreement is there with reasons thereof, you have to give a report in the LFAR. Again, it says that if yes, give reasons. So invariably you will say no. To skip this particular question, you will say no. Now, if you are saying no here, and tomorrow if they are going to identify any account as NPA, they will say that you have said no. And if you are going to have an inconsistency in the earlier one, that is upgradation or downgradation, if you are not agreeing, you are saying you are not dragging that particular report here. There is a subtle difference between what you are reporting there and what you are reporting here. So if you are going to say that the asset classification is not proper, and somewhere you are stating that these accounts are, in my opinion, to be classified as NPA, here if you are not reporting that, then again it is a problem. So your inconsistency of reporting within the LFAR also has to be managed by the auditor. Now coming to the IBC, what is stated is that any account where the insolvency bankruptcy code has been initiated and which has not been properly exercised at the branch level, that is to be reported. Now I think it is not very relevant because of the COVID, again regulatory package has increased the limit of IBC from 1 crore to 100 crores. So many of the accounts will go out of the IBC platform. But even then, for the purpose of understanding, we should see whether any accounts are to be initiated as per the IBC norms, and if it is not initiated, that is to be reported here. Now the rejection, whether the rejection, that means in the case of an export account, Jalapati sir, please remind me. I can speak up to 9 o'clock, no problem. But the only thing is that you will have to tell me the time. Okay. So now ECGC is coming into play in respect of your export credit. So export credit guarantee corporation, we all know what is export credit guarantee corporation. Whenever there is an export due which is not coming as per the regular pattern of your repayment, if it is not coming, the guarantee will be given by the ECGC. Now, this is to be very clearly understood from the COVID situation. In the COVID situation internationally, only our country is better. If you take any other country for that matter, there is lot of problems economically faced by lot of buyers across the globe. Repayments are not coming properly. So the ECGC claims also have to be, or it should be shooting up. As on 31st March, your ECGC claims will be shooting up because I am not recovering the money from the overseas buyer. So in the case of those cases where export oriented places, I will say Tirupur, Kannur, Alleppey, all these places are export oriented, even Bombay for that matter, your ornaments export, all these things are export oriented places. So when you are going to do an audit of export oriented branches, you should be very careful to see that whether the ECGC claim is rejected by the ECGC or not. The ECGC claim will be rejected prima facie, and they will be asking for rectification of the ECGC claim, and the bank will again submit the ECGC claim. So what will happen is that at the branch level, as on 31st March, the branch may claim that we are having the liberty to submit the ECGC claim once again. So that is not required, that is not to be considered. What you have to consider is that on the face of it, if the ECGC has been rejecting, and if you feel that a provision has to be made on that particular account, it has to be brought in this particular report and an MOC has to be made. So the rejection of the ECGC has to be specifically reported here. There is a table given in the LFAR about reporting of the claim rejection by the ECGC. Now execution. There are two types of branches. There are specified branches which are specified on the business model of asset recovery. There are asset recovery branches where the asset recovery branch or otherwise there are regular branches. Whenever there is a judgment debtor, usually the bank has, apart from the SARFACI, if you go through the civil procedure, what is that is you have got the first phase of your litigation as to establish that there is a judgment debtor. Once you are establishing that there is a judgment debtor, that this person has to owe you this money, then the second thing is obtaining a decree in favor of the bank. And once the decree is obtained, third phase is recovery of this particular amount due out of the assets which are securitized. That is called execution petition. So there are three phases. So what Reserve Bank of India found out is that there are a lot of cases where the decree has been obtained and the execution petition has not been filed. So you have to identify there is a suit register. If you go to any branch, there is a suit register, and you are also reporting on the suit filed accounts. You are giving a certificate in respect of the suit filed accounts. Whenever you are going to certify the suit filed account, you should go into the detail of the suit filed account and what is the status of the suit. If it is already decreed and if the execution petition is not filed, that longevity of filing the execution petition is a incipient weakness of the branch which is to be reported here. So those accounts where decree has been obtained and the execution petition has not been done in respect of default borrowers, you have to have the particular report here included. Now recoveries has been properly appropriated between interest and principal. You all know that in the banking parlance, whenever recovery is coming, first it is apportioned against the interest. Then only it will go to the principal. That is a overall banking concept. But there are certain cases where some of the banks very clearly for reducing the impact of your overall income tax, what they have done is that they will be having an accounting policy which is consistently adopted and accepted by the board, that they will be taking the recovery first to the principal, then only to the interest. So when it is taken first to the principal, your P&L is not affected in respect of any recovery which is coming. Only after the principal is totally made zero, you are zeroizing the principal, then only you will go to the payment of income tax. So the deferment of income tax happens. So there are certain banks, especially in the case of certain banks which has been merged now. Take the case of so many banks which has been merged with the other bank. Union Bank, around 3 banks have been merged. Your Bank of Baroda, 2 banks have been merged. Bank of India merger has happened. Indian Bank merger has happened. So the policy of the earlier bank and the policy of this bank, and the merger has happened during this particular period. So you have to just go through the policy of the earlier bank as well as policy of this bank, and that is the inconsistency in respect of appropriation of interest and principal in respect of recoveries, post merger and pre-merger. Pre-merger will be the old policy of accounting. Post-merger will be the new policy of accounting. Now, centralized processing centers. There are a lot of cases where the documents are reported to be at the centralized processing center. Take the case of classic example is your State Bank of India. If you go to Audit State Bank of India, they have got centralized hubs. We call it RSCPC, SMAC, etc. SMAC is a small scale hub of the State Bank of India where all small scale loans are sanctioned and documentation is happening at the SMAC. And the branches are only acting as a collator or a licensing office to collect the borrower, collect all the documents and give it to the SMAC. And in the case of your housing loan, in the case of your car loan, etc., it will go to the RSCPC. Like that, the documents will be centralized in a centralized place. And if you are going to visit the branch, the document will not be available to the branch. So a Reserve Bank has identified that the bankers are taking shelter on this particular aspect, and the documentation weakness is not being reported by the auditor because the auditor is not able to verify the documents. The Reserve Bank says that if you find that you are asking for a particular document and if it is not reported or if it is not brought to you for verification, you have to report here. I would say that it is a comfort clause, because if the branch is not giving you the document, it is a duty of the branch to give you the document. Where the documents are held at the central depository office, whether the auditor has received the relevant documents as asked by them and on test check basis and satisfied themselves, report the exceptions. It means that if you have not received, you have to report here. You can ask. You have got all the right to ask, and they are bound to give you the documents. Now coming to the last lap of my slide in respect of advances, this is the non-fund based, because majority of the big NPA cases, majority of the losses of the bank is happening because of the crystallization of the non-fund based limits. As you all know, non-fund based limit is in respect of your LC, that is the letter of credit as well as bank guarantee. So when an LC is going to be devolved, what the bankers will do is that the LC will be directly debited to the CC account. So there is a direct transformation of your non-fund based into fund based, or your crystallization of the LC is happening, with which the bank is put to heavy loss. So what happens is that the Reserve Bank has identified this, and they have identified that this is happening because there will be a term in the sanction that there will be interchangeability of limits. Supposing a borrower is enjoying 100 crores CC limit, and he will have around 4 term loans of 25 crores each, and he will also be enjoying a bank guarantee limit of 25 crores, and he will be enjoying a LC limit of 25 crores. Which means that altogether he has got a loan portfolio of 30 crores, 300 crores, which is sanctioned by the sanctioning authority. And one word will be given in the sanction that in the eventuality, the borrower can request for interchangeability of the facilities, which means that you are keeping the overall limit at 300 crores. You will be able to interchange the fund-based into non-fund-based, which means that the interchangeability is going to pose a lot of problems in respect of direct loss to the bank. So it is going to be a crystallization of non-fund based into fund based. So what the bankers were doing is that they were resorting to the interchangeability clause, and they say that we have done only according to the sanction, and it has put many banks into loss. So they have said that if the interchangeability is exercised, you have to be, if you come down, it says that if the instances where the interchangeability have been exercised between fund based and non-fund based, the subsequent devolvement of invocation has to be reported. So wherever interchangeability has happened, you should be very clearly mentioning it here. And if it is now, I will add one more point, that if there is an NPA account which is classified as a non-performing account, and all the fund-based limit are classified as NPA account, and you are already making a provision in the NPA account. On the other hand, what happens is that the same borrower has got some non-fund based limit which is getting due in 1st April, 2nd April, 3rd April, or 15th April, or 15th May. So there is a immediate risk of devolvement of the LC. If you find that this particular risk is there, that also has to be considered, factored for the purpose of your MOC. So if at all you find that the account is non-performing asset, and if the account is SMA2 account, you should take into cognizance the real-time situation of a future loss which can happen to the bank in the immediate future. That is, you are immediately after the balance sheet. That is maybe 10th April or 15th April. If there is huge amount of LCs to be matured, or your due date of the LC is going to come in the near future of first fortnight of the April, then you have to be very carefully dealing with that particular account. Now, in the case of sundry suspense and this thing, they only say that the intangible assets has to be reported here. And again, the dormant and inoperative accounts are all a concurrent audit matter, which I don't want to touch up. This is a new thing which has been added, saying that whether the bank is having an identification of the dormant account properly or not. So there is a system in the CBS itself that the identification. What is more important is that you are asked to report about the AML, that is the anti-money laundering. Here, the transformation of a dormant account into an operating account has got certain procedures, set procedures to be followed. If it is not followed, and immediately after the transformation of a dormant account into a performing account or an operative account, if huge amount of check is being passed to the particular account, there is a possibility of an anti-money laundering. So you have to be very careful in seeing what is the account, what is the operation of the account immediately after it has become an operational account from the dormant account. So you have to take the list of the dormant accounts at the beginning of the year or at any point of time, and later as on 31st March. In between, if there is any account which has been operational or which has been made operational, you will find that this account, the transaction of that account has to be just browsed to find out whether there is any anti-money laundering. We have come across a case where an SB account was made operational, which was stagnant in the name of an old lady. She was only signing with the thumb impression. A fixed deposit receipt in the name of the lady to the extent of around 5 to 6 crores have been managed to be making the account operational. They have encashed this particular fixed deposit, and later it is found that the fixed deposit itself was a fake deposit, and the fixed deposit was emanating from a branch which is a sensitive area, our Kashmir branch. So that is a problem which has been found. It is actually a different story altogether. So it is a terrorist funding. So AML guidelines are to be followed to see through the non-operative or the dormant accounts. Now the balance requirement of non-maintenance charges, there are a lot of circulars which has been brought. The only point is that you have to just overall verify whether the minimum balance charges have been properly applied or not. Now next most important aspect which is coming is whether the deceased depositors. There are a lot of litigations faced by the bank in respect of deposits relating to the deceased depositors. So whether the bank has got a policy, whether the procedure of handling the deceased depositors are being properly handled at the branch level or at the bank level or not. There is an extent guidelines in respect of handling the deceased depositors and how to release the deceased depositor, deposit of the deceased persons is there, and you have to see. Now coming to the gold bullion, we have to only see whether the gold bullion, the branch is designated to handle gold bullion. If the gold bullion is handled, mainly it is only import of gold and giving it to the exporters. So we will call it as a metal desk. If the branch is committed to the metal desk, you will have to see whether the gold bullion custody and your all procedures in respect of holding the gold is properly done. And what I would add here is that the branch and the bank was earlier doing coin business. So now, even today, there are certain branches which are holding the coins earlier, which is now suspended. So the coins are not transferred, or the coins are not sent to the head office. So there, you will have to report how it is reflecting in the balance sheet of the branch. If there is any gold coin which was elsewhere old stock, there are cases where the branches are holding old stock. So you have to only see the GLP, and if the balance sheet holds an asset of gold, you have to see whether the branch is a designated branch of bullion desk. If the bullion desk is not designated, then these particular gold coins may be an old stock which has to be reported here. Now the systems, see, that is what, whether the software systems are used. This is the exact case of Nirav Modi. What has been reported, what has been asked to be reported by the branch auditor is to see that whether there is any external software used in the CBS environment. There in the Nirav Modi case, the SWIFT was totally out of the CBS. That was the case. So this particular question is in relation to that particular case. So the branch auditor has to verify whether all the related transactions, mainly the foreign exchange transaction, I would call the foreign exchange transaction, whether it is aligned to the CBS has to be seen. So the Forex platform as well as the INR platform, whether it is aligned, whether it is going through the CBS has to be seen, and you can also get a certificate in respect of that. And IS audit, you have to see whether the IS audit is conducted or not. If IS audit is not conducted for a very long period of time, you have to report that. Then coming into the exceptional reports, what is asked is that whether you have to see whether the exceptional report is regulated, generated at the branch level, and it is addressed properly at the branch or not. Now inter-branch accounts, everything. Now the frauds, what is more important is that the LFAR itself has printed the reasons of the fraud. It is falsification of account, false representation by the borrower, misappropriation of funds, especially to related party, shell company transactions. All these things are to be verified by the auditor and reported. So in the case of fraud, earlier we were only generally saying that there is no fraud reported by the branch. We may get a management representation from the branch also. But you are not confined. You are not, it is not sufficient that you are reporting like that. In the new LFAR, you have to see whether any of the accounts is falling under this category. That has to be reported as a potential fraud. This is going to create onerous responsibility on the branch auditor in respect of your fraud reporting. Now coming to your early warning signal, I have already discussed the procedures of data integrity. Very, very exhaustive question. What is asked is that data integrity. I know that everybody will know what is data integrity. Data integrity itself, the definition of the word integrity itself is so vast. It is qualitative and quantitative. So they are asking about the total data integrity. So you have to have a very high exercise of seeing the system as well as the MIS reports, whether the feeding of the data are properly being done or not, etc., etc. to see whether the data integrity is there. Now the last question is that earlier the LFAR was only asking you to verify the branch audits for the earlier audit report. Have you verified the audits, other audits which is conducted? Now it is very specifically asking, did you verify the earlier branch audit report? Did you verify the earlier LFAR? Did you verify the internal audit report? Did you verify the snap audit report? Did you verify the concurrent audit report? And if so, you have to report. You have to report. So you have to report about the inconsistency of any matter which is going to be verified by you. So I will say that you have to make a table here that and say that the concurrent audit report for February is verified or for the March is verified. You have to be very specific in your verification and reporting in the LFAR. So at the end of the day, what I am telling you is that if you read the LFAR for 4 to 5 times, you will abstain yourself from doing the branch audit itself. So what I would suggest is that don't go through very vehemently. But the only thing is that you will have to do due diligence to the work assigned to you. So what I would request all the members is that members physically has to be present at the branch. And members have to do the due diligence and they should be planning the audit. Every auditor, every speaker and every senior in the professional is saying that you have to take the LFAR as the front end. LFAR has to be taken as the front end because it is posing a lot of responsibility on the auditors. So the risk on the auditors is more in respect of the LFAR. So you take the LFAR as the front end. When you go for the pre-audit itself on 25th of March or 20th of March as per the discretion of the bank, you will have to take the LFAR and you will have to jot down the points where you have to mark in respect of the LFAR. Once you make a audit program aligned with the business profile of the branch, you will be able to do justice to the LFAR. Once you are able to do justice to the LFAR, I think all other things are only corollary to the LFAR. So LFAR exhaustively covers the entire operational aspects of the branch, and this time a specific reporting has been asked by the branch auditor, and if you are not reporting, it is a lapse on your part. If you are misreporting, it is a lapse on your part. If you are not reporting fully, it is a lapse on your part. And if you are not reporting, the percentage of reporting is also gauged by the Reserve Bank. So the branch auditor is given a lot of importance. His report is given a lot of importance. His comments are given a lot of importance. So we should also rise up to the expectation of the Reserve Bank of India as well as the ICI. And should always, I will always jocularly say that we are always guided by the motto song. That is, that means that you should always have an eagle eye. When the others are sleeping, you should be awake. On the contrary, it is not that you should be sleeping when the others are awake. So what is expected of the auditor is that he should be awake when the others are sleeping. So you should see which is not being seen by the others. But at the same time, you should not skip not seeing anything which is seen by everybody. So that is what is to be expected from the branch auditors. I think Joman is now only got the crux of the matter. So he will supplement or he will add to my this thing because he is very good at auditing. Okay, anyway, thank you very much, all the participants. Thank you very much, Jalapati sir, chairman. Thank you very much, secretary. Throughout the program, both of you were sitting, and I should be thanking and congratulating both of you for having a wonderful session, which has enriched our knowledge as well as the knowledge of the members. And you were summing up and your add-on from the Jomam sir is also was very good. And I should say that we should all rise up to the expectation of the RBI and see to it that our profession is always gauged high in respect of the RBI, in front of the RBI, and in front of the regulators. Thank you. Thank you very much.
Thank you very much, sir. Great job from you, sir. The limited time and definitely the change in the LFR, the precautions, your cautions for the precaution, really great. And the program is what added flavor with the presence of our senior colleague, the council, Mr. Jaman. Thank you, Jaman sir, also. So now, shall we go for the question hour?
Yeah.
So maybe we will take 2 to 3 questions, sir. The paucity of time already almost 8:30. We can take 2 to 3 questions, then we will wrap up.
Yes. 2, 3 queries. How to check the end use of agri loans if the details are not available with the bank? the audit.
See, that is what end use. There is a very exhaustive circular which has been given by Reserve Bank of India in respect of loan delivery. There is a loan delivery system. Disbursement cannot be just like that made in the account by just allowing the borrower to withdraw cash. So when a agri loan is given, or when any loan is given for that matter, if you take the case of a housing loan, what is required is that you are not given, if 75 lakhs is sanctioned as a housing loan, you are given the loan only in a phased manner according to the sanction report or the pre-sanction inspection of your development of your construction. Same is the case of your project loan. If you are taking a car loan, the money is not given to you. You are not allowed to withdraw cash. They will only fund this particular money to the car vendor. So these are all the loan delivery systems. Here, what you have to verify is that whether the disbursement has been done according to the requirement. Supposing that the agri loan is taken for the purpose of purchase of a tractor. So this is also considered as an agri loan, indirect agri loan. So whether this agri loan has been taken for the purpose of agriculture is point number one. So how do you verify whether the particular borrower has got agricultural land, whether the land is used for the purpose of agriculture? And once that is established, then you have to see whether the loan delivery system, that the disbursement is properly made or not. If the disbursement has got any incipient weakness of bulk withdrawal of cash, supposing that agri loan is sanctioned to the extent of 2 crores of rupees. The second day, he comes and withdraws 1.9 crores of rupees, which is permitted by the branch. There is all incipient problem in respect of disbursement. The branch should not permit 1.9 crores unless otherwise he is getting a justification as to why the cash withdrawal of 1.9 crores is happening. And you have got so many other restrictions of payment above 2 lakhs rupees in cash. So you have to find out from the conduct of the account itself, transaction verification again. When you verify the transaction, we have discussed in the first portion of the LFAR, you have to make a verification of the transaction. When you make the verification of the transaction, when you make the process flow of the transactions within the branch, you will be able to identify whether the loan delivery system has been properly followed or not. If there is any flaw in the loan delivery system, if you smell any incipient weakness in the loan delivery system, then that is a matter of control issue and that you can report. So you have to go deep into the conduct of the account, how the loan is sanctioned, how the loan is disbursed, and what is the quantum of disbursal, timeliness of disbursement, inspection reports. All these things are going to be hand in hand with you to see whether the end use is properly satisfied or not.
Next is how to ensure compliance of the RBI circular dated 6th August 2020 regarding CC or OD account and less than 10% of the overall exposure.
Yeah. See, it is very clearly said in the LFAR itself that in respect of those accounts which is less than 10%, you need not verify individually. Your individual verification is restricted to those accounts which is 10 crores or 10% of the fund-based and non-fund advice of the branch, whichever is less. So you have to identify those accounts. And in respect of other accounts, you have to only verify the process of the entirety. That is from the branch perspective, your overall internal control, how the branch is adhering to the guidelines of the head office, how the branch is conducting the account by itself, and per se whether the Reserve Bank of India guidelines have been properly followed by the branch, etc. So in that particular perspective, in respect of those accounts, but if it is a quick mortality, you have been asked to report. If it is an account which has been downgraded or upgraded, you have to report. If there is a manual intervention in respect of deflagging, you have to report. If there is an early warning signal, you have to report. All these things are covered. So you cannot skip the responsibility just saying that it is not coming under the specific guideline of requirement. If at all it is a loan which is only 5 lakhs of rupees, if it is a quick mortality account, the LFAR is asking you to report that quick mortality. LFAR is again asking you that whether the upgradation is done as per the IRAC norms and whether there is any manual intervention in the classification of the account. So you cannot leave away those accounts which are not coming under the benchmark or above the threshold. You will have to go deep into the overall performance and your wisdom and acumen has to be used in selecting those accounts. How will you select those accounts? You have got SMA 0, you have got lot of reports are there. Lot of exceptional reports are there. TOD report is there. TAL report is there. Loan overdue report is there. Limit which are due for renewal is there. Your early warning signal accounts are there. Your red flagged accounts are there. Your SMA 0 is there. SMA 1 is there. SMA 2 is there. From there, you will be able to pinpoint and select those accounts which are having incipient weakness. And you have to do an exceptional. That is a management by exception. That is what I would suggest in respect of those loans which are not coming in the benchmark.
Okay, sir, we'll, I think, call it a day for the sun for the day. And the queries, if any, will be mailed to you, sir. Please respond to them.
Yeah, I will address it. No problem.
Okay, sir. Thank you very much for your time and the presentation. And I'll, Chairman, with your permission, shall we conclude?
Yes, sir, we can conclude, sir. We can conclude. Yeah, we can
Chairman, sir,
conclude.
Okay, sir. Today it's a great presentation by two stalwarts. Yesterday also two excellent speakers. All in all, this 2 days refresher course for 5 hours is extended to almost 6 hours, 6.5 hours. But still, there is we find a shortage of time in answering queries. Overwhelming response of the members is a great strength to SIRC and the team we are conducting programs here. So thank you very much, all the viewers and all the delegates, and we will definitely be coming back to support you through the best speakers like Mony sir and Kuntal sir, so that your queries will be answered even by mail. And in the days to come, you can keep in touch with the WhatsApp group that is created by the ICI also. So we are very happy and very great learning process of these 2 days is now concluding. We are concluding it with a heartfelt thanks to Mony sir, and also in the absence here to Kuntal Shah sir. And also thank you very much for your presence here, Jaman sir. And thank you, Chairman sir, and also the SIRC office, and especially Selva for doing the great job of handling these things day in and day out. And we have been continuing, and we will be announcing the programs of SIRC. Please be alert with our SMS and mails, and please make use of our programs and strengthen our what's called energy to conduct more and more better programs. Thank you all, and good night for the day.
Thank you. Thank you, sir. Thank you, sir. Thank you, Jaman sir. Thank you, Mony sir. Thank you. Thank you.